are for these businesses operating in North America?
Yes, believe it or not, they are. It's been a while since I covered the cannabis industry in Europe, but in terms of medicinal marijuana, there are markets. They're not as big as Canada or the United States, but Germany actually was one of the main markets that my colleague covered. And when it comes to CBD use, the UK, Italy, Germany were all sort of budding markets, excuse the pun, for the use of CBD. Although it was sort of struggling to get regulated. It was sort of like the Wild West in terms of a disrupting substance for the food industry, for the medicinal industry. But no, a lot of these, it depends if you're talking about the medicinal side or if you're talking about, additives that go into food or sort of like the wellness industry as well. But in Germany, there are definitely there's still a lot of interest from entrepreneurs in developing startups in that segment. And I think, to my knowledge, the German government has it on their agenda to legalize recreational use. I think they have a couple other issues that they have to address right now in Germany that are a little more important than cannabis use recreationally. But yeah, that's my knowledge.
I just always thought it was so interesting because they're so progressive and they're so into like homeopathic remedies, but you don't have the same high school experience in Germany. Kids there aren't smoking weed when they're sophomores in high school, which is kind of like what happens in America.
She never guessed you were going to go down this road.
I know.
I did not. I had no idea, but I like it.
You did
I like
your
where your head's
research,
at, Matt.
It's just one more disruption. Anyway, Monica, thanks so much for joining us. We are going to get over right now to Michael Barr. He's got your world and national news. Michael?
Thank you very much. Former President Donald Trump is at a Manhattan courthouse today, set to testify in his civil fraud trial involving the Trump Organization. He's charged with fraudulently representing the value of his real estate portfolio.
You have a racist attorney general who made some terrible statements, and we just see some more that came over the wires today. It's a very sad situation for our country. We shouldn't have this. This is for third world countries.
New York Attorney General Letitia James on her way to the courthouse.
Before he takes the stand, I am certain that he will engage in name-calling and taunts and race baiting and call this a witch hunt. But at the end of the day, the only thing that matters are the facts and the numbers. And numbers, my friends, don't lie.
Trump's daughter Ivanka is scheduled to testify Wednesday. Secretary of State Antony Blinken is in Turkey discussing the Israel-Gaza war. In Ankara, Blinken has been meeting with his Turkish counterpart about humanitarian pauses.
Could advance things that we're all trying to accomplish, including getting hostages back, including getting a lot more assistance into Gaza, including getting people out of Gaza, citizens from other countries who seek to leave.
It comes as Israeli forces have severed northern Gaza from the rest of the territory. Tyson Foods is recalling about 30,000 pounds of dinosaur-shaped chicken patties. Some people reported finding small pieces of metal in them. And some fruit pouches for children are being recalled for possible lead poisoning. The USDA says they're made by Schnucks and Weiss supermarket chains. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. After booking its best week in about a year on optimism, the Fed could be done raising interest rates. The major averages are slightly higher right now. You have 7 of the 11 major industry groups in the S&P 500 in the green. Healthcare is in the lead, and that's where you can find shares of Eli Lilly. Lilly easily beat third quarter forecasts. It reported last week. Meantime, Jeffrey Yu at BNY Mellon says, you know what, bond yields may not have peaked just yet.
We can easily revisit those highs and higher up again. We tend to think of this as a symmetric process. You know, things ramped up very quickly, yields ramped up very quickly, and they can come down just as quickly.
Right now, the 2-year yield 4 basis points higher at 4.88. The 10-year up 6 at 4.63. Tesla, most active, up 0.6%. Reuters says they're going to produce a new model that'll cost about $27,000 at its factory near Berlin. Dish Network reporting revenue for the third quarter that missed the average analyst estimate. The CEO there, Eric Carlson, he's going to step down. Dish Network shares just about 21% lower. The S&P 500 up 10 right now. That's up 0.2%. 43.68 on the index. The Dow Jones Industrial Average up 54 points. That's a rise of 0.2%. NASDAQ 100 67 points higher. That is up 0.4%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Emily and Matt.
John, thank you very much for that. John Tucker there at the Business Flash. Emily Grafeo in the Interactive Brokers studio with me for the hour, for the next hour?
Just for this hour.
Oh.
I leave at 11.
All right, well, you got to
start
slowly, and then we'll start using it for longer. And eventually we'll have you for 5 hours
all
straight.
Day.
Yeah.
Exactly.
All right, let's bring in right now Frank Sorrentino. He is chairman and CEO at Connect One Bank. It's NASDAQ traded, the ticker CNOB. And Frank, wow, what an insane week, or 2 or 3, or how do you deal as a banker with the rates volatility like this?
Yeah, how about a year? How about an insane year?
Yes, that's fair.
It's been an interesting environment. Certainly there are lots of things at Connect One that we try to control. But what the Fed policy is and where rates are going and how the market reacts to those rates is something that's somewhat out of our control. And so, yeah, it's been very challenging, not just for Connect One, but for banks in general.
Frank, what sectors of the economy are you seeing actually absorb the effects of the Fed tightening? And what areas are maybe still waiting for the monetary policy lags to kick in?
Yeah, I think when you look at it, I think that question would be answered differently from different bankers from different parts of the country. But certainly here in the New York metro market, at Connect One, we certainly see that the vast majority of our clients are absorbing those rate increases. And it's showing up in lots of places, right? Rents are up. If you've been to a restaurant lately, you see that the price of a meal is up. And I know, there's inflation component to all this, but that's part of the rate increase. And so it's building into the economy. And I think we're seeing it in higher prices, higher costs, and it's being incorporated in every aspect of our economy. I think our builders, for one, are for the first time in a very long time having to figure out what are the interest rates and what's the interest component of a construction project. But they really didn't have to think about that too much in the past. So all these things are leading to higher prices and definitely a more normalized environment where interest has a cost.
But nothing normal about the current housing market, right? I mean, in terms of residential, especially previously owned homes, that market seems to have grind to a halt.
So at Connect One, we do a lot of new home building. We don't see a lot of the mortgage refinance, although we do see some. And yes, for the existing home market, it's a difficult place today because folks have low interest rate loans. They really don't want to move and give up that rate, or they can't. But on the new housing front, we do see a level of optimism where as you know, in the New York metro market, and by the way, as the nation, we are underhoused, right? There's just not enough apartments, not enough housing units. And so new product that's coming to the market is able to absorb the higher costs due to inflation, the higher costs due to interest rates, and there is a ready market buying that product.
We hear all the time that builders offer incentives, they're buying down points or they're giving lower rates. And I was talking to a land developer the other day who said they are giving builders incentives. And I thought, where does the buck stop? Because obviously at some point somebody's got to pay the price.
The end consumer pays the price, right? So we're certainly seeing prices have somewhat leveled off relative to new home product. We're also seeing it in the rental market. Rents continue to go up over the last couple of years at a pretty drastic clip. We are, however, starting to see that level off, and there are some places where we are seeing some level of concessions. So I do think we're getting to a more normalized place. And I think that's part of the message that came out of the Fed, is that the economy is beginning, as first question you asked, beginning to absorb a more normalized rate environment.
Your notes, it says that you think the economy is on a soft landing trajectory. I'm wondering what you see as the CEO of a bank that deals with small businesses and deals with lenders. What are you seeing that maybe some of the other Wall Street prognosticators that are still calling for a recession are missing?
Well, look, I start with employment, and in all the markets that Connect One serves, we're seeing a shortage of people to fill jobs. We're seeing very, very low unemployment. We're seeing a strong labor market overall, rising wages, and that to me underpins everything. People that have a job, feel good about their job, and see their wages rising can absorb those changes in the economy, higher interest rates and everything else. They can absorb rising rents. They can absorb higher costs of food and housing and everything else. And so to me, that's the foundation on which the economy is built. And no one's been able to convince me that that's going to change anytime soon.
I just want to ask about deposits. How sticky are they? How do you fight deposit flight? Is it just a question of the rate you offer, or do you think that depositors also really look into services and the culture? I mean, what's your view on that?
Look, I think there was definitely back in March a reorganization of the deposit market versus large banks, small banks, medium-sized banks. Where people had funds, the entire notion that interest wasn't being paid on certain types of accounts, FDIC insurance coverage, lots of questions, lots of things came to the fore in those few weeks of March and early April. I think the market overall, though, has pretty much settled out, and people are pretty much staying where they are. There is the ease of being able to move money from bank to bank. But folks, Connect One is mostly a business-oriented bank. People come to us not necessarily for the highest rate. They come to us for services. We have clients who have multiple types of businesses with us. And so rate is not the number one thing. That doesn't mean we're not going to pay a market rate, but it does mean that folks are making decisions in banks like ours relative to things like service and availability and the ability to talk to decision makers and what the other side of the transaction looks like if there's a loan there or a business loan or something else. So I think things in general have stabilized. Keep in mind, however, beside the Fed raising rates, they've also been shrinking the money supply and shrinking the Fed balance sheet, right? Earlier this year, we saw for the first time since 1949 that M2 actually shrunk, and the Fed is on a track to continue to reduce the size of its balance sheet. That's putting a lot of pressure on banks and other financial institutions.
Frank, great to get your views. Really helpful context there. Frank Sorrentino is the chairman and CEO of Connect One Bank, against NASDAQ-listed CNOB. Is the ticker. And thank you to you as well, Emily Grafeo, joining me in for Paul Sweeney. It's been a pleasure anchoring with you.
It's been great being here. I learned a lot about cannabis and regulation in Europe when it comes to marijuana use. So thank you for having me.
This is Bloomberg. Let's get over to Steve Rappaport right now. He's got your company news. Steve?
Matt, Tesla will produce a new model that will cost less than $27,000. Let's get more on that from Bloomberg's Jeff Bellinger.
Steve, Tesla's new offering comes as competition intensifies to produce more affordable EVs for the European market. Reuters reports Elon Musk announced the plan to staff last week when he visited Tesla's factory near Berlin, which will make the vehicles, but Musk did not say when production would start. Last month, the European Union officially launched a probe into subsidies China extended to manufacturers of EVs in the country. Tesla exports its Model 3 from its Shanghai plant globally. Steve?
Thanks, Jeff. Shares of Tesla currently up less than 0.5%. Former President Trump takes the stand in a New York State lawsuit that accuses him of inflating his net worth by as much as $3.6 billion a year to get better terms from banks and insurers on his properties. Bloomberg News legal editor Tony Lin has more on the case.
Part of, I think, our interest today is that it could be a little unpredictable. There's been a lot of drama in terms of, Trump's lawyers in particular trying to make hay with the idea that the judge's clerk is biased against him. The judge last week ordered them not to talk about his staff. The Trump himself has previously been subject to this sort of gag order.
Bloomberg News legal editor Tony Lin. And FedEx is telling pilots to seek work with a unit of American Airlines as the pandemic-era surge for air cargo slows. Those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller here in the Interactive Broker Studio with Emily Graffeo. Just switching out my earpiece there to make things a little bit easier. And we're going to get over to Michael Barr right now. He's got your world national news. Michael?
Thank you very much, Matt. Emily, Secretary of State Antony Blinken wrapping up his tour of the Middle East today in Turkey's capital, Ankara, where he held talks with his Turkish counterpart about the Israel-Hamas war and tensions in the region.
We've also had very important conversations throughout this trip with countries in the region on the role that everyone can play in making sure that the conflict doesn't expand, doesn't spread to other countries. And of course, we remain very focused on the hostages held by Hamas, including Americans, in making sure we're doing everything possible to bring them home.
Secretary Blinken now heads to Tokyo for a meeting with the G7, then on to Seoul and New Delhi. Meanwhile, Israel continued intense airstrikes overnight across northern Gaza. Once again, phone and internet lines were cut. Donald Trump takes the stand today in his own defense at his civil fraud trial in New York City. The judge has already told Trump's attorneys to control your client. The former president and his eldest sons, who took the stand last week, are accused of grossly inflating his assets and falsifying corporate financial statements. Ken Nowday was a federal prosecutor for Southern District of New York.
The more that the former president says and goes into, the more record he creates that can be used against him, frankly, in this case and potentially in the other cases that are pending against him. And remember, those other cases are criminal cases.
Former federal prosecutor of New York, Ken Nowday, spoke to ABC. 1 year from the 2024 presidential election, and former President Trump remains the clear Republican frontrunner. There's word Florida Governor Ron DeSantis, though, will score a big endorsement today. Iowa Republican Governor Kim Reynolds is endorsing DeSantis. Finally, your Halloween decorations may still be up, but stores are already going gangbusters for holiday shopping. A survey by Retail Me Not finds consumers spending 29% more than last year, an average of $932. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Matt, Emily?
Michael Barr, thanks very much. Now, we are looking at an S&P 500 that, well, it rallied a lot last week and is still up, 13% year-to-date-ish. But obviously, the big tech stocks are most of the driver of that, and some of the stocks in the S&P 500 have shrunk a lot more than they normally would. Emily Graffeo, you wrote a story on this. It's interesting. The top, I think, 35 stocks in the S&P mid-cap 400 are bigger than the smallest 50 caps in the S&P 500.
Yeah, there's a little bit of chaos here at the borders of the S&P 500 and the 400. And when you actually look at the S&P 500, 1/5 of the companies in that index don't meet the market cap threshold requirement for new members. So if you're a stock and you want to get into the S&P 500, you have to be above $14.5 billion. And right now,
that's part of the draw, right? That's why people buy the S&P 500, because you want to buy the biggest companies in America.
Mm-hmm. Well, I was speaking to a few analysts about this, and they still said, well, if you look at the weighted average market cap of the S&P 500, it's still the largest. But if you're a quant investor, someone who's really trying to look at, okay, I want my large here, I want my mid here, I want my small here, to have this distortion is a little disruptive.
All right, so that's one of the stories that you put out today. What are you working on?
Well, I just also published that other story about the move to T+1 and how that's going to affect ETFs. This is a very wonky subject, but it's something that everyone in the industry is talking about. There are ETF plumbers, liquidity providers having working hours late to kind of talk about what this is actually going to do to have the move to settlements T+1 in the U.S.
They've got to get it done because we need faster settlement. I mean, there's no reason it should take days and days in, 2023.
That's right.
It's insane. Great having you in the studio. Thanks so much for joining us. Emily Graffeo there from the Bloomberg Cross Assets team talking to us for the hour. Katie Greifeld's in next. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Matt Miller here in the Interactive Broker Studio. Paul Sweeney has kicked off a long lunch, and he won't be back in the office until 3 p.m. So he's chilling like Dylan.
I don't think that's it, actually, but we'll go with that story.
Luckily, Katie Greifeld has darkened our door, and she is now with me in the Bloomberg Interactive Broker Studio.
Do I talk now?
Yeah.
How are you guys?
It's the first time we've spoken today, but we're going to keep talking all day because we are anchoring ETF IQ at 1 o'clock this afternoon together.
We practiced that.
What are you looking at today?
What am I looking at today? I'm looking at this bounce back in yields after just the vicious rally that we saw last week. We're finally going to see if there's some conviction behind that. Last week was busy and it was weird, and it's another busy week with a lot of Fed speak.
Absolutely. Let's kick it off right now with John Tucker and your Bloomberg Business Flash. JT?
All right, the S&P 500 edging slightly higher after racking up the best week of the year. Mega cap stocks driving gains. You have Microsoft, Apple, Amazon, NVIDIA, Meta among those leading the index right now. And investors are still latching onto that narrative that the Fed may be ready to cut rates next year. They point to evidence of the slowing labor market. We got those figures on Friday. Still, Chris Verone at Strategic Securities isn't ready to call the top in bond yields.
There is such confidence here across the street that bond yields have peaked. Right? Yields are off 40 bips from the highs. I think we got to see a little bit more to say with conviction that we're done with rates up for this cycle here. I mean, the trend in yields is 3 years old. It's been pervasive. And after 10 days, we're all ready to close the book on it.
Well, this is the first band day for bonds in the past 4 sessions. They haven't yet unwound the rally that we saw Friday. Whether or not they're going to do that may largely depend on the Fed Loan Officers Survey. That comes out at 2 p.m. Wall Street time. As back to equities, Morgan Stanley's Mike Wilson says the S&P 500's best week in a year was just a bear market rally. S&P 500 up 6 right now. That's up 0.2%. 43.64 in the index. The Dow is up 37 points. The NASDAQ 100 45-point rise right now. That's up 0.3%. The 2-year 5 basis points higher, 489. The 10-year up 6 at 463. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Dude,
thank you very much for that, John Tucker. Matt Miller here with Katie Greifeld. We're going to bring in Carmen Reinecke. She is a Bloomberg cross assets reporter and is going to talk to us about what's going on in the stock market today. Let's dig a little bit deeper. Carmen, what do you got?
Yeah, so I'm actually on the stocks, the equities team, not cross-asset. Don't want to misrepresent myself.
Cross-asset.
So I've always felt like I never know, right?
Yeah.
I mean, there's just a big room over there of print reporters, and
True.
I feel like you're all on different assets, but if I say cross-asset, that just covers the whole gamut.
Right, it is.
So-
It is a
You can't be
blanket.
wrong. You cannot be wrong if you say cross-asset.
All right, so you cover just the stocks.
Just
You're
the
working,
stocks.
what, you sit next to Bailey?
I sit next to Bailey.
Nice. All right, so what are you seeing here? I mean, we could have a 6th day in a row of gains.
Yeah, we'll see. So looking at some interesting movers today. First one is in the timeshare space. So kind of exciting for people, I guess, looking, forward to their vacations.
It's about experiences.
It
right
really
now,
is.
you know?
Yes. So Blue Green Vacation Holdings, ticker BVH, is up more than 100% to the highest ever after Hilton Grand Vacations said that it would purchase the timeshare company in a $1.5 billion deal. So this really, boosts Hilton's timeshare portfolio to more than 200 properties and locations such as, where is it? Charleston, South Carolina, Las Vegas.
Not bad.
Yeah, some interesting places.
So a merger Monday. if
Merger
you will.
Monday for sure.
Yeah,
for
it's
sure.
interesting that M&A has been heating up, but IPOs are pretty much still on life support.
Telecom Italia had a big one over the weekend, right? Selling their fixed
Yeah.
line business to KKR. That was like 22 billion euros.
Yeah.
I
missed that one, but
well, it doesn't matter because we're in America, right?
Let's go down the list here. I also see Fresh Pet.
Yeah,
Tell me about Fresh Pet. This feels
is a
more
great
tangible.
one. I know, well, it's, especially as people that have pets. So Fresh Pet released a set of earnings that analysts in Wall Street really liked. The company is up about 17%. That's right now. That's ticker FRPT. So basically, it also gave a really encouraging outlook. It gave a narrower than expected loss for the third quarter, and analysts are feeling really good about this company. They think it has a a solid long runway for growth, and a few also made comments about the company having some protection, even if consumers are sort of trading down to more like budget-friendly food for their pets. So an interesting.
You know about Katie's pets, right?
Yes, I do know about Katie's pets.
She
I'm
has
also
a hairless
cat
cat.
owner. I'm also a cat. My cat has
Yours
hair.
has yeah.
Yeah.
What's your cat's name?
Her name is Zia.
Zia. And you would spend money on Zia.
I do.
So
What's your cat's name?
Catrick.
Catrick.
Yeah.
Like a
so we
play
call
on
him.
Patrick.
Yeah, exactly.
But you also have Batman.
Yeah, and Gus.
And Gus.
I'm not shopping.
Are horses, do you consider them pets? Is it pet? Pet's not the right word
they're
for
partners,
a horse, right?
I would say. They're spiritual partners. And you don't shop at Fresh Pet for them. But I do think this is an interesting story because, I don't know, in tracking the consumer, you are seeing big ticket items. You're seeing polling spend back on that. But when it comes to little luxuries, when it comes to spending on your pets, consumers are still paying up.
I mean, that's not even a luxury. That's a necessity, right? People will pay for their pets
but they're buying,
before they pay rent.
They're buying
right?
raw dog food. They're buying, the fancy stuff.
Dogs are important.
Absolutely.
You've got to buy them. I mean, I'm sorry, but a little bit more important than cats.
I don't know about
Right?
that.
Oh, well.
So the thing about dogs is they love everyone, whereas cats, when a cat loves you, a cat loves you specifically. And I think that that's working through Fresh Pet's results as well. Then we have, so moving on from earnings, we also have a lot of executive C-suite shakeups.
Yes.
Tell me about what's going on.
Yeah, so the big one this morning is Bumble. The founder, Whitney Wolf Herd, is stepping down. She's been there almost a decade. She's the CEO and founder. And so shares are trading down on that. They're down about 7%, ticker BMBL. I mean, this is interesting because the dating stocks have not done very well this year. Match is also down. Bumble is down. I mean, it used to be a $20 billion company. Now it's like $2.5. So, people are not reacting super positively to this news. They're also another company that's brought in a CEO that doesn't have prior dating app experience. So it's really interesting to see sort of how they're going to try to grow and I think kind of go more into the technology space. They're really trying to beef sort of up that side of leadership. We'll also find out more about Bumble because they report earnings tomorrow. Ooh. So yeah, it'll be interesting to see sort of what the last quarter had in store for them and if they say anything more about this transition. Wolf Herd will stay on as executive chair, so she's still, in the room and helping, steer the ship. But yeah, that was an interesting one.
I'm glad I'm not an investor in Bumble because they've done horribly.
Yeah.
But my wife is a huge fan of the app.
Really? Is she still using it?
She has never used it that I know of.
Okay. Is that how you met?
No.
No.
We met on the floor of the New York Stock Exchange.
Beautiful.
That's a much better story.
But she likes that it's kind of like female forward,
Yeah. Yeah. And I mean, with all these dating apps, you need something that differentiates yourself. But it seems like it's not working in the stock market, that they're all just kind of down. Even though you would think that dating is inflation-proof, is recession-proof.
Right, and I mean, I think also with the millennials being such a big generation, we're all kind of in that time of life. Same with Gen Z, they're coming up. Everyone's using the apps, right? People don't meet on the floor of the New York Stock Exchange
anymore. They don't go to bars.
It's too bad.
They don't.
No.
No.
I don't know where
that's both of those things are too bad, but they are sad truths of these new, younger generations. Thanks very much, Carmen, for joining us. Carmen Reinecke is a member of the Bloomberg News Stocks team.
There you go.
Not cross-asset, not multiple assets, just one.
It's a very political distinction in the newsroom.
Is it important? I know you sit across the aisle from each other. So.
Yeah, we just kind of glare at each other.
Let's bring in Matthew Palazzolo right now. He is a Bloomberg intelligence analyst, senior analyst for property and casualty insurance. And when I saw his name here, I was thinking, oh no, is there another disaster? And I'm sure there is somewhere, not to make light of all the disasters. But you're here I guess mainly because Warren Buffett has so much money and in cash, basically, right, Matthew?
So he's got a problem that I wish I had, is that he's generating more money than he could spend. So coming out of third quarter results, they were good again. You may see the headline number that they lost $12 billion. That's an accounting convention. It runs the changing the equity portfolio runs through the income statement. So it was nothing realized. It was really a change in Apple shares caused a large gap loss, but the operating companies' earnings were up like 60%.
So this is so interesting, the fact that Berkshire has so much cash and they're generating cash off their cash. This is something that's going on with the tech companies as well. It was interesting. If you take a look at Alphabet, their interest income doubled to more than $1 billion in the latest reporting season. Tesla's in the same situation. Like you said, it's kind of a happy problem, but they're going to have to use it at some point. How much pressure is there on Berkshire right now to actually put its cash to work?
I think the pressure has come off a little bit. So they bought Allegheny for about $12 billion. So they haven't been sitting on their hands. That helped them expand in reinsurance a lot, which has been a great market this year. As you mentioned, with the interest rates going up, they were earning $50 million a year on their cash. They're going to earn over $5 billion on it this year. So it's taken some pressure off. Charlie Munger just gave an interview where he talked about private equity still pushing up the prices of deals. So honestly, we may see them sit on that cash for a little bit longer. They also haven't been buying back much of their own stock.
Yeah, I guess there's more pressure to use your cash when it's earning absolutely nothing.
Right, and that's obviously not the case right now. I feel like if you're a millennial or a Gen Z, you've always thought of Warren Buffett as somebody who has so much cash in search of a big acquisition, and he seems to constantly have trouble finding them, right? I mean, I guess he did Precision Castparts, which no one ever heard of before, but was worth, $40 billion. Otherwise, they just haven't made really big acquisitions, right? I mean...
No, I mean, they've been putting cash to work, $5 billion here, $10 billion there. I mean, that's still a lot of money, right? It's not compared to the amount of money that they have and the amount of money that they're generating, but it's really hard. And they're not going to do something stupid. I think they both want to do one last big one before they leave Berkshire Hathaway one way or another.
That's where I wanted to go. I mean, there's legacy to talk about here.
Yeah, I mean, I think their legacy is probably cemented, but they both really want to do something else, I think, or Buffett more specifically. I mean, Buffett is, 92 or 93, I forget, and Munger's 99. So, I go to the annual meeting, and there is this kind of feeling in the air that this might be the last one where they're both there every time I've gone. But I also don't think they're going to do something stupid with the money. They just won't. I think they'd rather go with the cash there than buy something that's too expensive.
Is there any idea as to what they're looking for? I know they're not going to tell us, like, they don't ever say an industry or, a certain manager, but they do give you the criteria, right?
Yeah, yes. I wish, if I could predict what Warren Buffett was going to do, I wouldn't be making or taking the Metro North to work. But I thought they were going to buy Occidental, and it really seemed like in his playbook they were buying little pieces of it. And then at the annual meeting, he came out and just outright said, "We're not interested in owning this whole company." I think it's going to be something you haven't heard of when it happens, or I haven't heard of, like a chemical company in South America or something like that that's somehow worth $20 billion.
Okay. And to your point on Occidental, so they don't want to own the whole company, but they've just continued to buy shares.
They're increasing their position. They looked really smart with decreasing their Chevron holdings in the beginning of the year. I can't imagine they knew exactly what was going to happen, but so they've been buying up some energy, taking it down. They've been in and out of financials too, so I really don't think it's anything I can point to, like, I was going to say energy, but I feel like they're up and down with that.
I wonder I guess Precision Castparts, Burlington Northern Santa Fe, Kraft, but they partnered up on that. I mean,
yeah, and they own Lubrizol, which is a chemical company. It makes, and I thought it made just additives for oil and gas engines. They don't. They make lubricants for EV batteries and stuff like that. So they are kind of positioned for the future there too.
So just the breadth of their portfolio is pretty fantastic. You just mentioned something that I didn't know about Berkshire, and then I'm reading the Bloomberg News main bar. I mean, they have Geico, Dairy Queen, See's Candy. It feels like they're in every single part of the economy, pretty much.
Well, I mean, which is I think a good thing. And if you saw what happened in this quarter, the insurance business made up for some weakness in some of the other businesses. So it's really diverse, and sometimes some of these perform better than others. I'm a little worried going into next year. I thought their consumer products, they make consumer products, they sell consumer products. I thought that was going to really fall off a cliff, and it didn't. It's been declining, the top line in that business, but it held up again. And there's so many different things to point to. They bought Allegheny, which owns Jazzwares, which makes, I don't know if you have kids.
Jazzwares?
Jazzwares. It's a toy company. It makes Squishmallows.
Oh.
And I told my kids.
These big sort of pillow, squishy,
so
furry
they had a Warren
stuff.
Buffett Squishmallow at the annual meeting, and it was a madhouse to get these things. And
Did you get one?
I did get one.
Nice.
I got one. It's still in its package. I don't want to take it out because it's a collector's item at this point.
Oh my goodness.
Oh, come on, 40-year-old virgin. You got to open that thing up and play with it.
I have not a Warren Buffett one, but I have a Squishmallow for my cat. So
I didn't even know what they were called until
It was a
today, but you see them everywhere.
They literally shut the line. You could buy stuff at the annual meeting. They literally shut the line down at one point because there were so many people trying to buy these things and carry them around.
I was always wondering that. So because I noticed they have the signage everywhere, but so they have like a See's Candy stand.
Oh, yeah.
They have a Justin Boots stand set up
everything.
there.
So this is the day before the meeting.
Yeah.
You can go in and buy almost everything. Pampered Chef they own, so it's not, they don't make this stuff, but it's more just like a retail, so it's kind of high-end cooking supplies. Boots, Fruit of the Loom they own, so you can buy underwear for like 20% off. Ice cream, Dairy Queen, and you walk around and you just buy a bunch of stuff.
everything you could ever need, Berkshire Hathaway owns.
That's pretty awesome.
Yeah.
Yeah. All right, Matthew, thanks so much for coming in. Matthew Palazzola, senior analyst for property and casualty insurance at Bloomberg Intelligence, talking to us about Warren Buffett's cash problem, which is that he generates too much. I think, he's got $156 billion now.
Yeah.
Right? And he's always hunting for an elephant.
Yeah.
Seems like he's always hunting for an elephant.
He's always hunting. He's always on the hunt. His white whale is still out there. We'll figure out what it is.
All right, Matt Miller here in the Interactive Broker Studio with Katie Greifeld. She'll be with me for, the hour?
Yeah, just until 12.
Until 12,
Yeah.
okay. I got a revolving door of...
Would you like to stay till 1 so I can go home?
No, I'm sorry. It's all you.
And John Tucker. This is Bloomberg. Let's get over to Steve Rapport right now. He's in the studio with your company news. Steve?
Matt, Dish Network is dropping more than 21% after its earnings this morning. We get more with Bloomberg's Simone Foxman.
Analysts were actually expecting a profit of 6 cents a share in the third quarter. Instead, they got a loss of 26 cents a share. Third quarter revenue missing estimates down about 10% year on year, and the company lost more subscribers than they expected across pay TV and wireless, losing, in fact, 225,000 mobile users. That's more than 4 times the loss that analysts had anticipated.
Bloomberg Simone Foxman reporting. Dish also announced Erik Carlson will resign as president and CEO. He will remain on the board of directors through the closing of a previously announced merger with EchoStar. A fruit pouch recall expands over concerns of lead contamination. Bloomberg's Gina Cervetti reports.
Schnucks Markets of St. Louis and Weiss Markets of Sunbury, Pennsylvania announced recalls of certain cinnamon applesauce products. Previously, Wanabana of Coral Gables, Florida recalled pouches. The FDA has received reports of 7 illnesses in several states possibly linked to the products. These states include Missouri, North Carolina, Louisiana, and Maryland.
That was Bloomberg's Gina Cervetti reporting. And Tyson Foods is recalling nearly 30,000 pounds of its breaded chicken Fun Nuggets. Tyson pulled the dinosaur-shaped patties after consumers complained of finding metal pieces in them. The nuggets sold in 29-ounce bags were produced on September 5th by Tyson. The Arkansas-based company informed the USDA about the problem and says it recalled the nuggets voluntarily out of an abundance of caution. And those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
Profits. Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with his Bloomberg Business Flash. After the best weekly performance of the year last week, S&P 500 continues its climb today, although it's just 7 points right now. You have 5 of the 11 major industry groups in the index higher. Information technology is in the lead, and that's where you're going to find shares of Apple. Apple did fall after the earnings last week. Investors now seem to be latching on to the fact that its earnings per share growth was in the double digits. I think it was like 14%, in fact, on flat revenue. Dish also right now, that is a standout. Shares of Dish, 22% lower. MoffettNathanson calling the results astonishingly bad. Third quarter revenue missing the consensus analyst estimate, and the CEO, Eric Carlson, he will resign. Right now, you have the S&P 500 8 points higher. That's up 0.2%, 43.66 on the index. The Dow Jones Industrial Average up 39 points. NASDAQ 100 up 53 points, a rise of 0.4%. Peak yields, well, they're up today. The 2-year up 6 basis points, 4.89. The 10-year up 6 basis points. That's at 4.64. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Katie and Matt.
JT, thank you very much, John Tucker, with your Business Flash. Katie Greifeld in the studio with me. Paul Sweeney on an extended lunch break right now. I'll be back at 3 p.m. Let's talk right now about, there was a Bloomberg story the other day that said the shrinking $1.3 trillion CLO market is bad news for bankers, and people have been talking about this market as if it's hit a speed bump or maybe even frozen. Got a guest here in the studio who says, not the case, not so fast. Thomas Majewski is the CEO of Eagle Point Credit Management. He's got experience across the street from JP Morgan to Bear Stearns and Mother Merrill. And then obviously some smaller shops as well. Tom, thanks so much for your time. What's your view of the CLO market right now?
Great. Thanks for having me, Matt. The market's far more vibrant, I think, than the headlines suggest. There's always ways you can cut the data, a lot of different ways. The actual new issue volume for CLOs remains quite robust. However, the activity of resetting or refinancing, which is where you go and reopen an old deal and re-extend it, that's slowed down significantly. So total volume is down, but the actual new volume created is not too far off from where it was last year.
Well, let's talk about one of the ways in which they cut the data. About 40% of issuers in this area of corporate finance are yet to price a new deal this year. When you hear a stat like that, what's your reaction?
It's an indication, perhaps, of the state of their performance and a state of the market broadly. Markets, investors in CLOs, including us, have certainly gotten far more selective. In a raging bull market, there was an old saying, 2 guys in a Bloomberg could print a CLO. The market needs a little more robust than that, and now that we have over 20 years of data for people's performance, it's easier to separate the top from the worst. That 40 is out of about 120, so the other way to cut that is 2/3 of the market is operating kind of business as usual.
What's your view on financial conditions right now? It seems like they were getting tighter. The Fed was letting the market do its job until the Fed told the market that's what it was doing, and now the market isn't doing its job anymore. So how do they look to you?
Well, the underlying assets in CLOs are syndicated loans, small pieces of big loans to big American companies. They're floating rate and senior and secured, which means in event of a problem, there's less risk of loss. The loan index is up about 10% this year, versus the Bloomberg Ag is roughly flat for the year, down a tiny bit. That's investment grade versus loans are below investment grade. And there was a lot of talk early in the year with increasing interest rates, and loans are floating rate, that companies wouldn't be able to service their debt. There was going to be a recession coming, and rates are going higher. As an investor, it's great we get a floating rate. For the companies, on the other hand, they have to pay that floating rate. The reality, though, is profits and revenue at most below investment grade companies continue to go up in this economy. Citibank just put out research that said more companies are getting upgraded than downgraded. And while there are some defaults, the default rate over this year has been roughly half the long-term average. So it's the economy's doing, or at least the corporate borrower in leveraged finance is doing far better than the headlines would suggest.
Okay, so overall, not too much consternation over increased interest expenses and servicing that debt. But for the pain that you are seeing, there certainly are companies out there that are struggling with that. Do they tend to be concentrated to any industry, or what is the common denominator there?
Thankfully, it's not one industry. Sometimes we've seen that. Maybe in 2015, we saw energy pose a problem. The problems where they do exist, and they're quite few, are generally broad-based. In many cases, it's due to either a company that just put on a little too much leverage, or a company maybe with a less skilled management team would be some of the biggest things, or change in regulation. One company recently, Envision Healthcare, which defaulted, had a number of businesses. Every business line was coincidentally infected by adverse changes in regulation for them. So just a perfect storm against that company.
You think that regulatory capital reasons are the problem, that some banks have, I guess, bought other things than AAA CLOs, but you point out Japanese banks are still big buyers. Why is that? Why are Japanese banks notable here?
Absolutely. Japanese banks remain some of the largest buyers of CLO AAAs and holders in the world. U.S. banks also own meaningful amounts. Some of the largest money center banks own more than 1% of their gross assets in CLO paper. Frankly, we joke that had some of the regional banks that are no longer with us bought floating rate CLOs instead of mortgages, they might still be with us, in fact. But the banks in the U.S., there's sometimes some stigma with the name. It's still a CLO. That sounds like a CDO. Many of those Japanese investors have been in the market for over 20 years. And across their AAA portfolios, what they've seen is everyone has paid off at par. There's never been a default on any bond they bought in the CLO market.
And let's talk a little bit about what happened in March. Like you said, maybe if those banks had maybe shifted out of treasuries into CLOs, we'd still be with them. But when we talk about what happened in March, we talk about it as a boon to private credit. Certainly private debt has been on fire this year. Where does the CLO market sit in relation to what we're seeing in private credit?
Sure. So we're a net beneficiary of that in a number of ways, frankly. Banks in general are putting less capital out as Basel III comes to fruition. Higher capital charges on banks are unambiguously trends in the market. The steady hand of private credit, which is typically in the form of private equity style funds, not short-term funds with redemptions, but long 10-year funds that can see a credit through from start to end. A lot of capital going in there. They've frankly bailed out a number of CCC rated syndicated loans and taken that out of the syndicated loan market, brought it to private credit as one thing. And another thing we've seen a real increase in, and it's an opportunity we're very interested in and have been deploying a lot of capital in, are something called regulatory capital relief transactions for banks. This is where a large bank will take a portion of their corporate loans or their auto loans or their fund subscription line loans even, and put them in a synthetic securitization. Some very loaded words there, but a good way to raise capital, and they can basically transfer the risk of owning those to investors, basically a way to raise capital without having to go to the stock market and do a secondary offering. The reality is over many years, those investments have done very, very well, and what we're seeing is banks are seeking more and more capital, knowing they're going to be facing higher capital charges. They're coming to that market with greater frequency.
But the private credit market is one that banks are, it seems like they're losing that business to almost a shadow banking group of lenders. Is that market, even though, I mean, you point out they're long-term lenders, you know, they aren't facing like immediate redemptions in a lot of cases, but there's not a lot of regulation there for how much business they're doing. So does that look like a place where regulation is going to grow into?
The good part about it is it's a steady hand.
Yeah.
And what goes wrong with banks is people take their money out. You and I can take our money out of our banks today with no consequence, except for the person in line after us, perhaps. Having these credits, even if there are riskier credits some cases in private credit, or maybe a little more leverage, having a small number of owners in that loan, each with a long-term mindset and a steady hand, I think is net beneficial. The investors in those vehicles typically are large, sophisticated pensions and insurance companies, so the investors getting involved in these underlying funds that are making these private credit loans are quite sophisticated themselves.
Okay, so we don't have much time left with you, but I could see regulation being a potential risk here. Talking to you, everything sounds pretty rosy, but if you take a look at the CLO market overall, where else are you seeing risks lurk?
Some of the risks continue to be, frankly, the biggest thing is the change in regulation and the impact on companies. I cited that one company before, something that makes like Medicare reimbursement slower or things like that, a regulation which might be a very valid regulation, then has an impact and changes a company's behavior. Overall, things that people often talk about, the wall of maturities in loans has been pushed way out, frankly, and the ability of companies to service their higher debts remains quite strong. Idiosyncratic risk is probably the biggest area that we look at. And then probably when we think about in our risk management meetings, frankly, continuing to look at our counterparties. One of the things we look at are what's the credit default spread pricing on banks that we do business with. While right now it seems most banks are on steady footing again, that can change very quickly. So we keep our eye out at the margins. We don't see a large systemic risk facing us, but no one was talking about a banking crisis in January of this year.
Absolutely. Thomas, thanks so much for your time. Really appreciate it. Thomas Majewski is the CEO of Eagle Point Credit Management. If you want more from him, he's going to go on Bloomberg Television in a moment and talk a little bit with Lisa Abramowitz about this as well. Right now, I want to get over to Nancy Lyons in Washington, D.C. She's got your world national news. Nancy?
Thanks, Matt. Former President Trump is on the stand and under oath in New York State's civil fraud case against him and his business. Today, he's already said the banks did not care about the statements of financial condition, the centerpiece of allegations of fraud. Trump has also sparred with the judge, accusing him of always ruling against him. The judge has threatened to excuse Trump as a witness if he waxes on and fails to answer the questions. Bloomberg News legal editor Tony Lin has more on how this trial differs from other criminal cases that Trump faces.
In this case, because it is a civil case, they can't refuse to testify. This isn't like a criminal trial where Donald Trump is accused of a crime and he is right not to testify against himself. He could, plead the fifth while he's on the stand, but that would look bad.
Bloomberg News legal editor Tony Lin. Later this week, the former president's daughter, Ivanka Trump, will take the stand, joining her brothers Don Jr. and Eric, who testified last week. With the next presidential election a year away, the latest swing state poll conducted by the New York Times and Siena College shows a growing advantage for former President Trump. Bloomberg's Anne-Marie Hordern has the latest from Washington.
The former president is leading in swing states. In 5 of the 6 that the New York Times Siena polled, the former president is leading, and it matches the Bloomberg News Morning Consult recent poll that also shows that Trump is ahead in swing states. And big issues like the economy, many of these voters say they trust Trump more than Biden.
Bloomberg's Anne-Marie Hordern. The next debate among the GOP presidential hopefuls will be held this Wednesday. Tyson Foods is voluntarily recalling about 30,000 pounds of its dino-shaped chicken nuggets after some consumers reported finding small metal pieces in them. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
Profits, headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. Stocks slightly higher. Yields are rising. Investors still latching onto the narrative the Fed's rate hikes may be over for this cycle. That was reinforced with the data on Friday pointing to a slowing labor market. Constellation Energy among the best individual performers in the S&P 500, up over 7%. That has hit an all-time high, boosting their earnings guidance for the full year. After falling last week, yields again are higher. Sell-off in treasuries accelerating amid a wave of corporate bond supply today. And Sarah Hunt, chief market strategist at Alpine Saxon Woods, says, you know what, treasury yields have clearly been in the driver's seat for these markets lately.
And this up and down is, I think, looking for levels, and the market is trying to understand what that really means. But I think the relief rally that we got last week in the equity markets was definitely on the back of lower interest rates and the idea that the Fed is done, and next year we're going to start dropping rates.
Right now, the 2-year is up 5 basis points, 489 there. 10-year up 6, that's at 463. The S&P 500 up just 5 points. That's up 0.1%, 43.63. The Dow's up 39 points. The Nasdaq 100 34 points higher. That's up 0.2%. And be on the lookout. This is actually going to matter. The Senior Loan Officer Opinion Survey on bank lending. That's out at 2 p.m. Wall Street time. They will, among other things, usually it's kind of backward looking. This one will be forward looking because it's going to have the outlook for the coming quarters. So there. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash, Katie and Matt.
All right.
Stunned silence.
Just think about the slews, you know?
Yeah.
Yeah.
Well,
Senior Loan Officer Opinion Survey.
See, it's a very soft data point because it has opinion in the title.
Right,
so.
and the Fed gets it before we do.
Theoretically, yes.
Yeah.
But I mean, look out for the bank stocks, among others. It may affect rates, so.
I mean, it's soft data, but it's some of the hardest that we have
That's
when it comes
all we
to,
got.
Exactly.
John Tucker, thank you very much for that Bloomberg Business Flash, or whatever it was. Katie Greifeld here with me in the Interactive Brokers Studio. Paul Sweeney is out today. Well, he'll be back.
Yeah.
But not until 3 p.m. He's taking an extended break right now. Dina Ting in the house as well. She is the head of Global Index Portfolio Management Team over at Franklin Templeton ETFs, and she will be a guest on our on next week's ETF IQ program. That's on Bloomberg Television every Monday at 1 p.m.
So this is the warm-up.
This is a deep tease, basically. Dina, just before we get into the important stuff, I wanted to address a story that Katie and Eric Balchunas, they don't think it's that important, but I think it's very interesting and kind of a big deal, and that is a big push by regulators to shift to T+1, to faster settlement, is going to drive up costs and create a lot of operational challenges for ETFs. What do you think about this drive to move to, at some point, we'll be on T. We'll just settle as soon as you make the transaction.
Yeah, I think all changes always have repercussion, right? So in the case of T+1, I think at the end of the day, when everybody is prepared for it, it should not be causing an issue. I've seen an example in India where they moved from T+2 to T+1 earlier this year, and everybody was worried, especially because India, the currency is restricted currency, is a little bit more difficult. So I would imagine with more preparation in the US dollar, in the U.S. especially, that it's less of an issue. And I don't know if you're aware, but in China, it's actually T+0.
Wow,
so,
no kidding.
Yeah.
Good for them. Yeah, the concern is actually international settlements. So there are many U.S.-listed ETFs that are going to have to be settling +1, but they hold, ETFs that hold European assets, for example, or international assets that settle +2 or +5. How do they square that circle?
Yeah, so those are the balancing act that a portfolio manager has to do, right? So when you're investing in the global markets, they all have different settlement cycles. So, and if you're in the midst of rebalancing, how would you balance something that settles in 3+3 if your funding is coming in at even longer settlement than that? But it's nothing unusual. So it's just about like, how would you handle the mismatch between where you're getting your funding versus where you're going to deploy that particular cash, right? So if you think about your example, so if let's say you're investing in European countries and you're buying a US equity, right? So the US equity will settle T+1, but let's say to buy that US equity, you require funding from selling the European equity, then you have to shorten the cycle of that one in order to be able to fund. Or you can have a line of credit to kind of handle that. So it's one of those things that at the end of the day...
It is complicated.
Yeah. Gosh, good thing that I, the end investor, probably don't have to worry about this, right?
It's true. Like that's why you trust your money managers.
Well, unless you take a hit on the margin, she's going to have to pay a higher fee, frankly.
Perhaps, yeah.
Perhaps.
All right, Franklin Templeton ETFs. What are you guys pumped about?
So we are looking at dividend tilt strategy. So we're pumped about that strategy because very rarely a strategy that focus on dividend focus beyond just dividend. So a lot of the strategies out there, all they care about is a higher dividend yield, right? But in reality, when you only singularly focus on higher dividend yield, you forget that you may be underperforming in some periods by a significant amount, likewise. So the tracking error between your investment universe and your strategy could deviate quite a bit. So at Franklin Templeton, we have a suite of dividend tilt strategies where you're balancing the tracking error versus the investment universe and the dividend yield. So you're still getting a higher dividend yield, but you're not limiting yourself only to companies that pay higher yield. You actually run an optimization to be able to balance out the tracking error versus the investment universe while still delivering on the higher yield.
And so it feels like income has been one of the primary things that investors have been looking for, whether it's through T-bills sort of funds, whether it's through these options overlay ETFs. How has demand for dividends actually look like?
Yes, so we're seeing over like $300 billion allocated to like income/dividend yield strategies. Within our lineup, our Divi product, DIVI, which is International Developed Dividend Tilt Strategies, we were seeing like close to like $500 million in net flows coming through. So income is an area that regardless of the environment people are looking for, and especially in the higher volatility environment that we're seeing right now, it gives you a little bit of downside protection as well as providing you the income that you're looking for.
You know, there's a lot of talk about the S&P today. Emily Griffeo wrote a story about the fact that a lot of the companies in the S&P are smaller than companies in the S&P 400 mid-cap index. All of the gains are really about the big 7 getting bigger, right? Does diversification matter right now, or do you just have to make the right bet?
Diversification always matter, right? The fact that the S&P 500 is driven by these 7 companies actually is a challenge, right? It's not like that for 10 years ago. It's not like that 20 years ago. A company or an indices needs to be diversified because that's how you kind of believe in like the returns potential. Because if you're just relying on 7 to drive the contribution of return, which I heard the number is like 85% this year, right? It's not balanced because imagine when it's doing well, of course it's good, but when it's not doing so well, then it's less so. So that's why we're always a big believer on like the mid-cap segment and believer in a balanced approach, whether that's through a smart beta or through a combination of strategies around.
But even still, it just feels like all of the attention has been on the big 7. And I mean, how are you seeing that filter across these different
Hang on, we don't have
strategies?
time for
Oh,
Any more
sorry.
questions?
Oh, no, I was just getting started.
So there's only 20 seconds left.
Okay, never mind. We'll ask it next month.
We'll talk to you next week, right? Next week at 1 p.m., you can hear more from Dina Ting, Head of Global Index Portfolio Management at Franklin Templeton ETF. She's going to join me and Katie and Eric Balchunas on Bloomberg TV, ETF IQ. This is Bloomberg. Let's get over to Steve Rappaport. He's got your company news. Steve?
Matt, Tesla reportedly plans to make an electric vehicle for less than $27,000 at its factory near Berlin as competition revs up for more affordable EVs in the European market. Bloomberg's Elizabeth Behrman has more.
Tesla, of course, has been talking about this for a little while. Elon Musk mentioned plans for a $25,000 euro, whichever you want, vehicle back in 2018. He talked about it in 2020. So there are some parallels to some other plans that he's put forward, such as the Cybertruck or autonomous driving. But certainly the context for this push seems to be really interesting because there are a number of other car makers also really moving into this space.
Thanks, Elizabeth. Tesla stock currently down less than 0.5%. Tech giant Alphabet is facing off with Epic Games at a trial this week in an antitrust case targeting the company's control of its Google Play App Store. Bloomberg's Charlie Pellet reports.
In a lawsuit filed 3 years ago, Epic claims Google has monopolized the Android app distribution market for more than a decade by striking side deals to pay off rivals and uses its vast resources to snuff out all competition. If Alphabet loses, it could be forced to open the door for payment and app distribution methods outside its own app store. Epic, the maker of the popular Fortnite game, largely lost a similar challenge 2 years ago to Apple.
Thanks, Charlie. And trading in shares of WeWork were halted as rumors swirled that the office-sharing company will seek bankruptcy protection. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, let's get over to Nancy Lyons right now in Washington, D.C. She's got your world and national news. Nancy?
Thanks, Matt. Former President Trump is on the witness stand today in one of the half-dozen legal cases against him. This is ahead of next year's presidential election. Bloomberg government Zach Cohen has details on this civil fraud trial.
This is the case brought by New York Attorney General Letitia James, who's alleged that Trump and his business inflated his net worth in order to apply for loans and whatnot in New York State, and could have the impact of actually barring him from doing business in New York State.
Bloomberg's Zach Cohen reporting. Today, the judge has threatened to excuse Trump as a witness for filibustering on the stand instead of answering questions, at one point telling the former president this was not a political rally. Well, this week, the Supreme Court is hearing arguments in a challenge to a 1994 law prohibiting people facing domestic violence restraining orders from having guns. A Texas man who was the subject of such an order after assaulting his girlfriend has challenged the law as a Second Amendment violation. Israel is closing in on Hamas in the Gaza Strip. That's according to a military spokesman, Richard Hecht, who gave a briefing earlier today. He says the Air Force has attacked some 450 Hamas targets in the past 24 hours and says fighter jets have killed Hamas commanders, including one of them responsible for special security. Meanwhile, U.S. Secretary of State Antony Blinken continues his Mideast diplomacy efforts, meeting today with his Turkish counterpart.
We just had a very good, lengthy, productive conversation with Foreign Minister Fidan here in Turkey. Covered a lot of important issues that the United States and Turkey are working on together, including the efforts to grow and expand NATO.
Secretary Blinken now heads to Tokyo for a meeting with the G7, then on to Seoul and then New Delhi. The men's college basketball season tips off today. Defending national champion UConn will begin the season at home against non-conference opponent Northern Arizona. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Matt and Katie.
Nancy, thanks very much. Yeah, Katie Greifeld here in the studio with me, and I'm far beyond. I mean, I'm way too old at this point. But
it also was your birthday yesterday.
True. Yes.
So happy birthday.
Thank you. I'm over a half of a century old now.
Just a day.
But I remember being your age and thinking, I really have to get my MBA before it's too late. Because I felt like it was something you had to do. I can't just have an undergraduate degree.
Can you imagine?
But then I remember being 30 and thinking, I think I'm a little too old now.
Yeah, now I'm 30, and I also feel a little long in the tooth to actually go back to school.
I'm here to tell you, you are not too old, Katie. But in the summer of 2022, we saw applications fall, and they continue now to fall at top-ranked MBA programs. And this is a problem for the big business schools, for Yale, for Stanford, Harvard, UCLA, Georgetown, etc. But it's not a problem for you.
Because it's easier to get in?
Yes.
Beautiful. Yeah. So just to put some more meat on that. So Bloomberg Businessweek did a survey. They looked at the highly ranked business schools and found that applications to full-time MBA programs at most institutions have been falling since at least 2017. At least 17 of the top 26 programs have seen long-term application declines continue into 2023. So, I mean, it does beg the question of why this is happening. I haven't read down into the article, so I don't have a reason why. But yeah,
well, a lot more people are getting CFAs, right?
Yes.
That's a viable alternative to an MBA, I guess.
Seems a lot harder. Maybe less expensive. Maybe
also less fun. In terms of like you don't have classmates, right?
Yeah.
If you do your CFA.
You just are studying for 300 hours.
Yeah.
Yeah.
No, I would not do that either. But you get a lot of respect.
You do.
Because it's so hard. And I think the hardest part about an MBA is getting in.
Getting in, and then, you know, you have to juggle all these different networking parties. You know, who am I hanging out with tonight? Where am I getting drinks? Things like that. And you do have to take, I mean, if you're taking a full-time program, you have to take time out of the workforce. It's very expensive.
All right, when you make your decision, give me a heads up.
Yeah, I'll come back on the program and tell you all about it.
Katie Greifeld will be co-anchoring Bloomberg's ETF IQ at 1 p.m. this afternoon with me and Eric Balchunas. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller here in the Bloomberg Interactive Broker Studio. I've got a rotating door of co-anchors here, and but they get closer and closer to me as we get later into the day. And now I've got Scarlett Fu. I've worked with her for 20 years, so I'm very happy to have her here. Hi, Scarlett.
Hi, Matt.
Very pumped to talk to you first about this new Bloomberg app functionality. Mm-hmm. So if you get the Bloomberg app in your Apple iPhone or in whatever else there is, right, Android product.
Okay, no, doesn't apply.
You get the white Bloomberg app, and now when you get into your car and you have CarPlay, either Android Auto or Apple CarPlay, the Bloomberg app will show up as one of the apps on your dashboard.
Oh, very cool.
How cool is that? And it's not just cool because like we're there and you know we're at the party, but it's cool because you can listen to Bloomberg Radio with that. You can listen to Bloomberg podcasts.
You can listen to Bloomberg on demand as well as live radio.
Do you have a podcast?
Do I have podcasts?
Do you have a podcast here?
No, I don't.
I thought you were doing like a sports business podcast.
Oh, yes, I do. I'm sorry. Yes. You know what? We call it the Business Sports Radio Show / podcast. So like the podcast part of it is secondary to me sometimes.
All right. Well, we can listen to your podcast this
thank
way.
You. All right. You set me up for this and I failed.
And it would be a really great way to do it. So anyone who has an iPhone or an Android device, go ahead and download the Bloomberg app and you can use it in your car. Right now, I want to get over to Charlie Pellet. He's got your Bloomberg Business Flash. Charlie?
Hi, thank you very much, Matt and Scarlett. We have got the Dow, the S&P, NASDAQ all advancing after notching its best week of 2023. S&P 500 index pushing higher now by 8 points. That is a gain of just about 0.2%. Dow Industrials up 64. That is an advance now of 0.2%, while the NASDAQ Composite Index is up 38 points, higher by about 0.3%. 10-year yield 4.64%. We've got a 2-year now yielding 4.89%. Spot gold, little change down just about $8 the ounce to $19.84, while West Texas Intermediate crude up 1.5%, $81.76 a barrel on WTI. The beaten down mega cap space driving today's gains. Case in point, Apple up 1.4%, Amazon up 1% right now, Alphabet shares up by 0.4%, Meta Platforms up 0.7%, and Nvidia up now by 1.1%. Matt Perrin is Director of Research at Janus Henderson Investments, and on surveillance this morning, he told us we have not yet seen the peak in yields.
Well, anything is possible in the short run. Probably, be another test higher in yields would be our guess, but that's not a call. Right. But then we think they settle in, into that range a little bit below 450, which would be actually constructive for stocks, at the equal weighted index is about 16 times earnings. That's, a reasonable valuation, assuming we don't, earnings estimates don't come way down.
And again, the 10-year right now, 4.64%. By the way, you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Recapping stocks higher, S&P up 6 now, up 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie, you know where you can get your podcasts.
Absolutely.
On the Bloomberg app, which you can now use in your car with Apple CarPlay and Android Auto. I'm pretty excited. And you can get print stories from Bloomberg News in audio form. You can hear the latest headlines at the click of a button. We have a new product, Bloomberg News Now, that allows you to do that. All of that in your car. This, for me, it's a game changer because I spend so much time in my car.
How long is your commute, Matt?
My commute, well, if I leave at 6 a.m. or before, I can get here in like 30, 35 minutes. If I leave at 6:01 or after, it's an hour.
Oof.
For sure. And I'm pretty excited about this new functionality. Matt Miller, Scarlett Fu here in the Interactive Broker Studio, talking about the new Bloomberg app functionality. You can now use it on your Apple CarPlay or on Android Auto, and I think that's pretty exciting. I want to get over to Alex Semenova right now. She's in the studio with us as well. She covers equities for Bloomberg News, and we're looking at, let me just double check before I go too far too fast. Yeah, we're looking at gains right now, Alex, and it could be the 6th session in a row if we end in positive territory.
Indeed, Matt. But I'm going to take a look at some of the names under the hood. One name that I was watching today is Tyson Foods. The company, which is the largest meat producer in the U.S., has issued a recall on 30,000 pounds of chicken nuggets due to possible contamination with metal pieces. We're talking about their iconic dinosaur chicken nuggets for kids. Specifically, it is plastic bags of fully cooked Fun Nuggets that were shipped to distributors in states including Alabama, California, Illinois, and others. The U.S. Department of Agriculture's Food Safety and Inspection Service issued a statement about this past weekend. Tyson apparently notified them after getting complaints from some consumers who discovered those metal pieces in their nuggets. Not a huge move in the stock price. Shares are down about 0.8%, but fell as much as 1.5% earlier in the day.
Okay, this is frightening as a parent. I'm just reading this. Matt, what happened
It's crazy.
Your daughter?
So fortunately, my wife is the most rigid and unflexible of parents, which sometimes can be annoying, but she would never allow me to give our daughter any processed food.
Okay, so this would never happen in your house.
So luckily for me, and by the way, if it were up to me, I would give my daughter anything she could grab with her hands, no problem. But my wife is very strict about, she's like, if we're going to give the kid apple puree, let's just throw an apple in the blender. I'm not going to give her something that somebody in another country put together and put into an aluminum package,
So good thing.
For us.
Good thing for you.
But unbelievable. The recalls of these, because there's too much lead in the apple cinnamon puree, and also the recall of the dinosaur-shaped chicken nuggets, which I'm a buyer, right? If there's chicken shaped like a dinosaur, I'm in right away. There's not even any discussion of cage-free or not, right? I want it. But now they have pieces of metal in it, so I'm worried about that.
Yeah, well, Mrs. Miller wouldn't have allowed it anyway, so we're good on that front. What else are you looking at, Alex?
Another name that has been in focus today, of course, is Bumble, the dating platform. Shares are down about 6% after news that founder and CEO Whitney Wolfe Herd will step down from the company. She will stay on the executive chair, and Slack Technology CEO Lidiane Jones will take over from Herd starting in January. Analysts did seem to have a pretty disappointing view of the news. Evercore ISI said that this is a near to midterm headwind for the business, and that it is negative for overall company morale. Of course, she founded this company 10 years ago, a big part of its vision. KeyBank Capital Markets also said that the news comes as a surprise going into earnings, and it's a cautionary flag.
All right. Anything else we need to keep our eye on? I'm just watching, when I think about stocks, not so much the individual stories or even earnings. I'm just watching what happens with rates, the dollar, and oil.
Yeah, and a name that is kind of a bellwether for the broader economy, of course, is FedEx. That's another name today.
They're telling their pilots to go work somewhere else, right?
Indeed. This comes as the freight industry broadly has been grappling with declining package volumes as people shift to cheaper sea freight after some of the pandemic backlogs. Bottlenecks eased. FedEx lowered its outlook for revenue in 2024 to no gain, given the slowdown.
All right. Thanks so much for joining us. Alexandra Semenova talking to us about stocks. She covers equities for Bloomberg News. And I want to get over right now to Mandeep Singh, mainly because I see him sitting right next to you.
Mandeep Singh is here to talk us through what Uber is likely to announce when
he's a senior technology analyst with Bloomberg Intelligence and Uber. What's your take?
Well, we know what DoorDash printed last week, and that was a pretty solid print. 25% top-line growth for a company that is viewed as discretionary when it comes to consumer spending. So, look, Uber is a category leader when it comes to ride-sharing, so I expect them to do well on the mobility side. It's the other half of their business, whether it's a delivery or the freight. That is always what puts the quality of the revenue in question, because they don't generate any EBITDA from delivery and freight, and that's where I think investors will be focused.
Their earnings comes out tomorrow before the bell, right? Or today after the bell?
No, tomorrow morning.
Tomorrow before the bell.
So what does the food delivery business really do for Uber? It just makes it's a diversification part of it, but it doesn't add to EBITDA at all.
I mean, they have like a 300 million adjusted EBITDA of 15 billion in bookings business, about 3 billion in revenue. But you could argue, compare that to mobility, which is 17 billion in bookings and generates almost 4 billion in EBITDA. So
it doesn't move the needle at all.
It doesn't move the needle.
At some point, though, it will.
If it grows, right?
Well, you have to ask yourself at what scale. If a company has a revenue of about 3 billion run rate in a quarter and it's still barely profitable, what is the scale? I mean, DoorDash, it seems to be on that path where they could have double-digit EBITDA margins. In fact, they guided for mid-teens EBITDA margins next year. So clearly, they are seeing operating leverage, even though they are smaller than Uber. And I think that's where the operational efficiency part, the fact that food delivery is a hard business, it's a three-sided marketplace compared to mobility, which is a two-sided marketplace. And you've got Instacart now, which we'll be reporting this week as well. So the lines are getting blurred, but one source of leverage for DoorDash was ads. These companies are all showing ad within the app, so marketplaces are not just about the service, but they will show you ads, and that's a very high gross margin business.
You mentioned that food delivery is a discretionary business. I would argue that for the younger generation, for Gen Z, it's not. There are fewer people getting their licenses, and I know for someone like Matt, that's like, what? People aren't getting their driver's license?
It's kind of heartbreaking, but also I want fewer people on the road.
So he's okay with that. Yeah. But for Gen Z, especially if they don't drive, ordering food in, having it delivered is I would argue for them a core spending need, not a discretionary spending item.
To the point where you can afford it, right? Because the alternative is you go to the restaurant or you pick up your own food and it's 20% cheaper. So it all comes down to affordability, and that's where everyone is sort of modeling a deceleration in volume growth, even though it is a core service and people will not stop eating. But you have to ask yourself, will the volume keep growing? Because it's obviously expensive to get your food delivered. And we haven't seen that with DoorDash, but I think we may see it with Uber.
Does Uber need these additional businesses? Do they need these additional revenue sources? Can't they just say, like, hey, we're doing a two-sided transportation business and it's working just fine?
I mean, that would have been great for the multiple that they fetch in the market. So clearly, the mobility business is subsidizing the delivery and the freight business, both of which are money losing, and that's why they fetch a lower multiple compared to their peers.
If they didn't have the food delivery business, would they just be Lyft, but with greater market share?
Yeah, I mean, look, this year they have taken market share from Lyft, and it's visible in the numbers. Lyft has been losing share. Uber has been gaining in mobility, and we know this is a network effects business. Once you have scale, you get the supply growth automatically. You don't have to spend a lot of dollars to acquire supply, and that's what feeds into top line growth. Even though they are a sizable player in delivery, they just never got to a point where they don't have to use subsidies to boost supply, which is why food delivery isn't profitable.
I mean, the other day I was ordering from Shake Shack down here. I think it's on like 53rd and or so, and Lex. Through the Shake Shack website, I did everything, and then when I clicked on deliver, it handed me off to Uber.
And how much did you pay in delivery fees?
I don't know, to be honest.
It didn't matter to you at the time because you were too hungry.
Exactly, and it's just a screen full of gobbledygook to me. I'm just looking for the next or complete button.
That's where they could bundle, and the subscription is the other stream of revenue that, look, Uber offers you both mobility and delivery, and they want you to pay $9.99 a month for the Uber One subscription, and they will waive off the delivery fees for that. So there is that argument.
So wait, if I pay $9.99 a month, because I keep seeing Uber asking me to join this, and I'm like, I have no idea what it is, and no thank you. That's all it is. They waive my delivery fees for
yeah.
food, which I almost never use.
Same thing with DashPass. So DoorDash, all these apps, Instacart, DoorDash, Uber, they want you to become a monthly subscriber, and they will waive delivery fees. The question is, how many of these subscriptions are you going to have?
In addition to your HBO Max, in addition to your Netflix and your Disney Plus and your Paramount Plus, and
I mean, there are
Amazon
a million
Prime.
subscriptions, Noom, you know,
Yeah.
that I have to keep up with, or else my life's gonna end. So Uber comes out with earnings tomorrow. Are they going to impress us? Do you think we're going to see a beat here tomorrow? I mean, obviously, if it's a surprise, you won't know, but.
Yeah, I think most likely they will print results will be above expectations, but the question is the durability of that top line. And that's always a question mark with Uber, is how long can they sustain that 20% plus growth? Because everyone wants them to divest the freight business, which is actually declining ever since they acquired. And remember, they bought all these companies. It wasn't an organically developed business. They made an acquisition to get into freight. And that's where people would want to divest them.
will Uber prices ever go back to what they were years ago when they first started? And no.
No, I mean, this is a business that's indexed to inflation. If oil prices go up, they raise the prices, and they are able to pass on those higher prices to consumer.
There's never
and to their drivers. Don't forget, they pass it on to their drivers too, because they keep taking more away from their driver in terms of a...
Well, I would argue their take rates have been steady, but at the same time, you know, it's a source of income for people who are driving on these platforms. And look, when times get tough, this is why this business model is good, because it's an additional source of income. It gives you the flexibility. That's why they're able to get the supply.
All right, very interested to see what the earnings look like tomorrow. I will say, for me, right, I have a problem with Uber Black cars not being good enough.
What do you mean Uber Black
So
cars not being
a lot of times I'll go to the airport and my choices are like a regular Uber for $100 or for like $130. It's like the premium, the luxury.
And you spring for that.
And I'll spring for that, and then they come pick me up in like a 10-year-old Mercedes GLE with the suspension completely blown.
Like,
it's got 150,000 miles on the clock, right? It's dirty. There's a ripped headliner. It makes me very angry when that happens. And the other thing that really grinds my gears is every car, I feel like, on New York City streets now is some kind of ride sharing. They've all got the license plate that starts with a T or starts with a W. Like every single vehicle. There didn't used to be that many yellow cabs. How come all of the cars in Manhattan are ride sharing vehicles? And they are literally the worst drivers on the planet.
Yeah, they're always double parked or triple parked, and rather than signal and put on their hazard lights, they'll just stop right in front of you
and
stop
they're
short.
slow. They leave a gap. They're not in a hurry to turn.
Yep.
In general, I feel like our
makes
lives
Matt's
have been
commute
made
miserable.
worse. Yeah.
know.
I would like to go back to checkered cabs. That would be my ultimate dream. Mandeep Singh from Bloomberg Intelligence. Thanks for joining us. Let's get over to Steve Rappaport right now. He's got your company news. Steve?
Matt, shares of trading in WeWork were halted today as rumors swirl the office-sharing company will seek bankruptcy protection. WeWork once had a valuation as high as $47 billion. The Wall Street Journal and other outlets recently reported the company could file for bankruptcy as soon as this week. Tyson Foods is recalling nearly 30,000 pounds of its breaded chicken fun nuggets. Bloomberg's Lisa Mateo has more on that.
Steve, Tyson pulled the dinosaur-shaped patties after consumers complained of finding metal pieces in them. The nuggets, sold in 29-ounce bags, were produced September 5th by Tyson. The Arkansas-based company informed the USDA about the problem and said it recalled the nuggets voluntarily out of an abundance of caution. The affected products carry the number P7211 on the back of the package. The USDA urges consumers to throw the nuggets out or return them to the place of purchase. Steve?
Thanks, Lisa. A fruit pouch recall expands over concerns of lead contamination. Bloomberg's Gina Cervetti reports.
Schnucks Markets of St. Louis and Weiss Markets of Sunbury, Pennsylvania announced recalls of certain cinnamon applesauce products. Previously, Wanabana of Coral Gables, Florida recalled pouches. The FDA has received reports of 7 illnesses in several states, possibly linked to the products. These states include Missouri, North Carolina, Louisiana, and Maryland.
Thanks, Gina. And Starbucks says effective January 1st, eligible U.S. retail hourly employees will see an incremental pay increase with at least a 3% increase in differentiated pay for eligible tenured staff. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ holding on to gains. S&P barely now up by less than 0.1%, but still building on last week's run-up. Last week, you recall, the S&P 500 index was up 5.9% for the week, up today by another 0.1% on the S&P. The Dow up 49 right now. That is a gain of 0.1%. NASDAQ leading the way higher, up 11, higher by 0.1%. 10-year yield 4.64% with a 2-year that's yielding 4.90%. Spot gold down $8 the ounce to $19.83, down 0.4%, while West Texas Intermediate crude oil is up 1.8%, $81.96 a barrel on West Texas Intermediate crude. FedEx is encouraging pilots to seek work flying for a unit of American Airlines as the pandemic-era surge in demand for air cargo slows. FreightWaves first reported a FedEx plan to tell its pilots to seek work at an AA affiliate. The freight industry is grappling with declining package volume and a return to cheaper sea freight as pandemic-era shipping bottlenecks ease and a resumption of long-haul air travel increases capacity for goods inside the hold of passenger airliners. FedEx shares are down today by 1.1%. Again, recapping, stocks higher, little change now with the S&P up by about 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charles, thank you very much for that. Charlie Pellet, the Bloomberg Business Flash. Scarlett Fu in the Bloomberg Interactive Broker Studio with me, Paul Sweeney, on an extended lunch break. We have had an amazing move in rates over first they shot up to 5, I think October 19th was the first day they went up to 5%. Then they came, I'm talking about the 10-year, right? Yep. Back down to 450 on Fed Day last week. And today they moved back up again. Right now, 464.7 is what we're looking at for rates. Let's talk a little bit more about this with Jeffrey Cleveland. He's the director and chief economist at Payden and Regal. And Jeffrey, it just seems like, the market for so long didn't believe it. that the Fed was going to raise rates, and they finally got on board at the end of October. And now Powell was out like, oh, thanks for finally believing us. Now financial conditions have tightened, and we're confident that's going to help us with our job. So they loosened. What's going on?
Yeah, it's pretty amazing. Financial conditions last week, if you look at the S&P or you look at 10-year yields dropping, financial conditions have definitely loosened. Powell said, though, in his defense last week, that tighter financial conditions needed to be persistent for them to have an effect. I'm not sure if they've been as persistent as the Fed might like. But I talked to a lot of bond traders, a lot of clients. We manage $150 billion in bonds, so the general thing that I get is that people think the bond market exists in like these two states. Either the Fed is hiking or the Fed is cutting. So if they're done hiking, they didn't hike last week, then therefore they're cutting. Maybe not in December, but soon. And I think that does, explain some of the rally that you pointed out in 10-year yields.
Yeah, I hear what you're saying, Jeff, but at the same time, Powell has been very, very consistent saying higher for longer, or variations of that phrase, higher for longer, higher for long, high for long. What is it about the Fed's message that the bond market's not hearing?
Well, I think for the last 18 months, a lot of the bond folks have been saying, well, they don't really mean it. They're
we know better.
Early on, there was skepticism about how far they could hike. A lot of bond bulls, or economic bears, if you will, thought that just a few rate hikes would send the economy into a downturn. I think that's why you had all that recession talk last year. Well, that didn't happen. So I think that's part of it. People are bearish. They think, growth has been good through Q3, but look at this jobs number we got. It was only 150,000. We're slowing, and that's going to forestall the Fed from being tighter for longer, and they're going to have to cut. So I think some variation on that theme is what backs up those bond bulls. The only thing I've been trying to tell them, though, is there is a third state here where the Fed is just, they're not hiking, but they're not cutting. And I'm sure both of you remember, like large stretches of 1990s, we saw that, where they weren't doing much. You saw it again last decade in the 2010s.
Me and Scarlett are old, but we're not that old, Jeff.
I apologize.
What about the supply? One of the things that none of us has seen in our lifetimes is, multiple $1 trillion deficits in 1 year. But that's now the norm, right?
Yep.
On the other hand, I feel like the bond market is so big and deep that they don't care. Stephen Major made a comment about it once that he said a couple of weeks ago, I guess it does matter. But everybody else we've talked to has said, don't really care that much.
I think what's interesting is where the issuance is coming. A lot of the issuance is coming in T-bills. And there's a huge appetite, Matt, for T-bills. So, even among our clients, they look at the front end, say 6-month, 1 year T-bills. That's very attractive. So there's definitely buying there. We know earlier this year, a lot of money was being held at the Fed by money funds putting money at the Fed in that overnight reverse repo facility because they were earning close to Fed funds. It's overnight money. As T-bill issuance is picked up, that money is coming out of that overnight reverse repo facility and going into T-bills. There's still probably, let's call it another $1 trillion there that could come out of that facility and buying T-bills. And the Treasury is gearing a lot of their issuance towards T-bills. So I think there's a big appetite. It's being absorbed for now.
It's being absorbed for now, and that is a good thing. And there was also relief that perhaps the Treasury was not issuing as many long-term bonds as well, the 10-year, for instance, or anything longer in duration that a lot of people are reluctant to get into. What do we know, or what are you thinking in terms of the marginal buyer here? If central banks from Asia are not buying up as much treasuries, if the Fed's no longer a buyer, that leaves us with investors who are more price sensitive, hedge funds, other players. What can you tell us about the quality of these buyers?
Well, it's the marginal buyer right now that's interesting is households. Households coming in and buying T-bills. So, I have friends and family members asking me how they can buy T-bills. So that has helped. People looking at those higher rates, 5.5% in the very front end. So that's happened. I think further out, talking to a lot of our clients, whether it's a pension fund or insurance company, real money investors, they are all talking about, should we extend duration? Is this the time to be buying further out the curve? So I think those are all active discussions that are being had. So there will be appetite, I think, for these treasuries that the Treasury is going to have to issue, but it's going to come at higher rates, and but people will step in. I think the other thing I would say is you have to draw pretty stark contrast between the U.S. its ability to issue debt globally and some other countries out there. Not everyone has the exorbitant privilege.
By the way, that brings up. I don't know how important it is for the investment landscape going forward, but it's kind of the drama of the Druckenmiller-Yellen fight I've found very interesting. Austria sold 100-year bonds. They sold century bonds for 50 basis points, right? Now the U.S. government has to pay 4.5 to borrow for 10 years. I mean, we're getting crushed. Why didn't we sell 100-year bonds when rates were zero? And when we had a Treasury Secretary that was smart enough to be the Fed chair. Like, I get that Mnuchin could have done it, but he was a Hollywood producer, right? Not really an economist. Janet Yellen is a PhD, and she's worked for the Fed and Treasury. She kind of should have known, right?
Yeah, I can't speak for the Treasury, but I've had conversations with folks over the years, and this is what they tell me, Matt. Two things. Number one, they say that the yield curve most of the time is sloping upward. Therefore, it does make sense to keep some of your issuance or a bulk of your issuance shorter along the curve. Even though you're rolling it, it's going to be at lower rates than some of the longer term stuff. So that's number one. Number two, they would say, I think if I can be a spokesperson, that they want to foster all along the curve. So they didn't want to term it out and issue a lot of long stuff. They wanted to keep liquid segments of the curve. So whether that's 2 years, 5 years, 7 years, 10 years, 30 years, they wanted to spread it out. So those are usually the two big considerations that come back when, we were saying to them in mid 2020, why not just term all this out? You're at a generational low on U.S. 10-year yields.
Hey, Jeffrey Cleveland, if you could borrow money for 100 years at 50 basis points, would you do it regardless of the other maturities that you had out in the market?
Yeah, I think their mindset was that was temporary and that they wanted to foster all along the curve. So that was the thinking. They don't want to put it all in one spot. However, if it's just me borrowing, then Matt, yes, I'll take the advantage of that generational low in Treasury yields.
When you're talking along the farther end of the curve, you didn't mention the 20-year. What's up with the 20-year where the yield is always higher than everything else?
Well, I think this goes back to why they were curious about where they did the issuance. There's different inhabitants of the various different parts of the curve. Mm-hmm. So I think sometimes when you look further out, there are certain clients of ours that don't go out that far. They're maintaining, inside of 10 years. Seems to be a very strong bid in there. And not further out. So I think it just depends on who the buyers are there and what their viewpoints are that determine that shape.
I'm glad you asked that, though, Scarlett, because I wonder all the time, too. Why? It seems like it's always just 10 or 15 basis points higher than...
4.99% right now for the 20-year. The 30-year is at 4.81%.
So 18 basis points higher.
Yeah, what's up with that?
Or 17. Yeah, it just, I don't know why, but I feel like it's a very interesting tenor. And a quirk of our bond market. Jeffrey Cleveland, thank you so much for joining us. Jeff Cleveland is Director and Chief Economist over at Payden & Regal. We love having him on, and I'm already looking forward to the next time we talk to him. Scarlett Fu in the studio for Paul Sweeney. I'm Matt Miller. This is Bloomberg. Let's get over to Nancy Lyons. She's in Washington, D.C. She's got your world national news. Nancy?
Thanks, Matt. Donald Trump is testifying today in a Manhattan courtroom in his civil fraud trial. He's accused of dramatically inflating his net worth to receive better terms on loans and insurance. Trump spoke outside the courtroom ahead of his testimony.
You have a racist attorney general who made some terrible statements, and we just see some more that came over the wires today. It's a very sad situation for our country. We shouldn't have this. This is for third world countries.
Prosecutors have been asking Trump on the stand about the value of his properties and his role in preparing financial statements. He says he was not involved in preparing a 2021 statement of financial condition because he was, quote, too busy keeping our country safe. The attorney then reminded Trump he was not president in 2021. Well, the issue of gun rights goes back before the Supreme Court tomorrow.
The case involves a federal law that keeps guns out of the hands of people under domestic violence restraining orders. The Fifth Circuit Court of Appeals struck the law down as a Second Amendment violation. This appeal will be the first test of last year's Supreme Court decision to expand gun rights based on an originalist interpretation of the Constitution. Proponents argue there is nothing in America's history of gun regulations that resembles this federal law. The Biden administration contends there's other history to look to, including English law that allows the disarming of dangerous people. In Washington, I'm Nathan Hager, Bloomberg Radio.
Michael Bloomberg, founder of Bloomberg LP, donates to groups that support gun control. Hamas says attacks on the Gaza Strip have killed more than 10,000 people as the Israeli army presses on. Bloomberg's Roz Matheson has more on Israel's strategy.
What we're seeing at the moment is basically an effort to bisect Gaza, north to south. So pushing people south, focusing the fighting on the north, but really cutting off the north from the rest of Gaza.
Global news 24 hours a day and whenever you want it with Bloomberg News Now.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long at Bloomberg with the Dow, the S&P, NASDAQ all in the green, but the S&P higher barely, up now by 1 point, little changed. We do have the Dow Jones Industrial Average up 19. That is a gain of less than 0.1%. NASDAQ now higher by 17 points, up by about 0.1%. Bottom line here, after notching its best week of 2023, the S&P 500 index is edging slightly higher. The S&P last week was up 5.9%. 10-year yield, 4.64%, with a 2-year that's now yielding 4.90%. Gold at $19.84 the ounce. Spot gold down 0.4%, while West Texas Intermediate crude is up 1.8%, $81.99 a barrel. Tesla is going to be producing a new model that will cost 25,000 euros, almost $27,000, at its factory near Berlin. This, according to Reuters, as competition intensifies to produce more affordable vehicles for the European markets. Again, recapping here, stocks are advancing, S&P up now by just 0.5 point. I'm Charlie Pellet, and that, John and Scarlett, is a Bloomberg Business Flash.
All right, Charlie Pellet, very, very good. I'm John Tucker. Matt was here earlier. Paul was here earlier. They both left, so you're stuck with me.
It's a rotating cast.
A revolving door. Let's move on to our next guest. You know, we're going to label these, Scarlett, under the heading of streaming news. Hugh Johnston, CFO of PepsiCo. He's now been named CFO of Disney. This move comes as Disney's paying for a stake in Hulu. And, of course, they report earnings this week. So when you stream and when you pay to stream, Scarlett, more and more you're seeing ads. And personally, I feel like I've been ripped off. But with
You're
that
angry as you're watching your
I can't do it. With that as our backdrop, let's say hi to our next guest, Mark Douglas, CEO of Mountain. They call themselves the hardest working software in television. They build advertising software. I really do. I can remember back, Mark, it had to be like 50 years ago when we were first getting cable in the area. And my brother made the pitch to the old man saying, it's great, lots of sports, and they don't have advertising on cable. Now it's just like... I feel the same thing is happening to me with streaming. What's the story?
Well, I mean, that works for the first 3 providers, which are willing to pay for, maybe 4. And then all the other cable channels, they're not getting any of that subscription money, so they have to have ads. And then it comes full circle, and the ones you weren't getting ads from were like, well, we could double our revenue if we had ads too. So we're just kind of, it's back to the future. We're reliving that moment in cable, but we're doing it on streaming now.
Yeah, but I don't watch those ads. And Scarlett, I know your kids aren't watching the ads.
Gen Z is just angry about having to watch advertising because they've grown up where they haven't had to do it. And so when they're forced to sit through it, it's just, something that really gets at them. Is the advertising that they're going to see on streaming services going to be markedly different than what we got on network television in the 80s and 90s?
Yeah, I mean, it's literally exactly what my company Mountain does. So we democratize TV ads. So what you're going to see is a lot more advertisers, and they're all competing to get your attention. So they're going to be more entertaining. Instead of it just being kind of the same old beer brands and car brands, you're going to see a lot of emerging brands that are actually using television now on streaming to kind of basically just show you the products they have, but do it in a very entertaining way. So it is a bit different. You're also starting to see the ads get shorter. Netflix just announced like 10-second ad formats for their property. So, I mean, just expect more entertainment from the ads, more diversity of advertisers, and hopefully over time they get a lot shorter just to connect with that consumer.
Will it look more like Super Bowl ads, or are Super Bowl ads a thing unto themselves that won't be replicated anywhere else because of the budgets, because of the big audience?
Well, I mean, some of the best advertising has come out of my company have been for the, not huge amounts of money.
Mm-hmm.
We have Maximum Effort, Ryan Reynolds' ad agency is literally a part of Mountain. And so they do ads for as little as tens of thousands of dollars, and they I think they might be doing a Super Bowl ad, so they do them for millions also. It just depends on the how much special effects and the actors and all that kind of stuff that controls the cost. The bottom line is, if you have something, a product people are interested in, and you present it to them in an interesting way, people do actually respond to the advertising and go check out your product and potentially become a customer. And that's, at the end of the day, you're just trying to connect, like match consumers with brands that potentially going to love. It's not like jingles anymore and just pushing brands on you. It's more about making that connection.
Is it right to say Netflix has sort of taken the lead on this? And if so, based on that, what is Disney hoping to achieve?
Well, I wouldn't say Netflix has taken the lead. I would say they have the most greenfield because they have no legacy business. Disney is kind of trapped in the upfronts and 30 seconds and 15-second formats, where Netflix is starting from scratch and they can just kind of reinvent what television advertising looks like. But that being said, it's not easy to do, and so they're out the gate struggling a little bit. But I think they will wind up becoming as innovative on the ad side of their business as they've been on the consumer side. The thing to remember with Netflix is they kind of reinvented the relationship between the consumer and the content, making it on. You no longer had to wait for the show; you could just binge it, all those kinds of things. And now they have an opportunity to do the same on advertising. Is to kind of reinvent the relationship between the advertiser, which funds all this programming for the ad-supported options on Netflix, and reinvent that relationship between the advertiser and the content. And I think they will, if they've been a very innovative company for a very long time.
But what counts for innovation in
Good
advertising?
question.
I mean,
Yes.
give me an example.
Yeah. So a lot has to do with the formats, I think. Is like, again, you don't have to sit there for 30 seconds. If you look at social, like if you look at ads on TikTok and you look at them on Instagram, even though they're both somewhat feeds, the ad content is very different. I think on TikTok, it feels much more like the content that you're scrolling through. Mm-hmm. On Instagram, it feels a little more traditional. There's a mix of video. So it's subtle changes that just make the ad format, again, feel like a form of the entertainment. So you're not like dreading the interruption. You're like kind of like hopefully entertained by it.
Yeah.
And one thing that makes the advertising, like something that we do, is what we call fast advertising, where the ads are, and this is like the maximum effort, where the ad content is like just extremely culturally relevant. It's like today's cultural news becomes literally tomorrow's ad. There's no delay. And so having that kind of support, where you don't have to plan it a half year in advance, you can just come up with something right now and get it on the TV. I think that's pretty important. I think that's something Netflix and pretty much all networks are going to start to support.
So as we look ahead to Disney earnings on Wednesday, Mark, I wonder if Disney has room to innovate advertising on Disney Plus or ESPN Plus that really takes advantage of its different businesses, including theme parks. What can it do innovation-wise that other media companies, other streamers can't do?
Well, I think they can do whatever they want. I think Bob Iger for quite a while now has been saying that he wants to kind of do away with the concept of an upfront, and he wants the advertisers to have a lot more freedom and just kind of Disney be where they want to be, not where they're trapped into an upfront contract. That being said, I think the first order of business at Disney is really to get all the business units operating like at their best. And, almost all of them have been struggling on some level for growth, for profitability. So, he'll probably, Disney, Bob Iger, that team there, they'll probably somewhat follow the same path as Netflix in terms of like, okay, we can innovate these ad formats. We don't have to stay stuck in the 30-second upfront format. But that being said, they have to get the viewers. People have to want to go and actually see the content before they want to see the ads.
Mark, always a pleasure. Appreciate it. Good to see you. Mark Douglas, CEO of Mountain. They call themselves the hardest working software in TV. the new CFO, Disney.
Hugh Johnston, he's a Pepsi, I don't want to say lifer, but he's been there for decades.
For decades, and I inducted him into the Hall of Fame of our high school.
Did you really?
My classmate at CBA.
Wow, look at you guys.
Yeah, he's there and I'm here. And right now, let's get an update on company news, and to do that for us, let's say hi to Steve Rappaport. Hi, Steve.
Hey, John. Tesla will produce a new model that will cost less than $27,000. We get more on that from Bloomberg's Ed Ludlow.
The idea of a $25,000 or euro EV has been long-standing. They first talked about it in 2018. Reuters reporting that this is going to be done out of Berlin. I've talked with sources at Tesla about this morning. I've been talking to them about it all year. The idea of a $25,000 or euro EV never went away. It's just been delayed, as Musk often does, kicks it into the long grass. But a lot of people thought it would happen in Shanghai first, and it looks like it's happening, according to the Reuters report, in Berlin. And that's interesting because in Europe, VW announced a 25,000 euro EV. The consumer there is used to smaller form factor affordable cars. And Berlin has incentives and capacity to do this. Shanghai is kind of busy at the moment, so that's kind of interesting.
Thanks, Ed. Walt Disney is hiring Hugh Johnston as the entertainment giant's new CFO and senior executive VP. Bloomberg's Abigail Doolittle says Johnston has spent the last 13 years as CFO of Pepsi.
So he is leaving PepsiCo for Disney. This change will happen. He'll be leaving PepsiCo on November 30th, starting at Disney on December 4th as their CFO. He will receive a one-time signing bonus. James Caulfield has been named as the new CFO at PepsiCo.
Bloomberg's Abigail Doolittle reporting. And FedEx is telling or encouraging pilots to seek work with a unit of American Airlines as the pandemic-era surge for air cargo slows down. The freight industry is grappling with declining package volume. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
And I'm John Tucker along with Scarlett Fu in for Paul Sweeney and Matt Miller. And right now, 12:55 on Wall Street. Let's get an update. World and national news. After that, we say hello to Nancy Lyons.
Thanks, John. Former President Trump is testifying in his New York civil fraud trial. Several times today, the judge threatened to excuse Trump as a witness if he continued to complain on the stand and not directly answer the questions. Ahead of today's proceedings, Trump lasted the trial, calling it, quote, an unfair situation and election interference. Attorney General Letitia James also spoke ahead of today's proceedings.
At the end of the day, the only thing that matters are the facts and the numbers. And numbers, my friends, don't lie.
James alleges Trump lied to his banks about his wealth in order to receive better terms. Trump's sons, Don Jr. and Eric Trump, have already testified. Trump's daughter, Ivanka, will be taking the stand later this week. Trump and his organization face a potential $250 million penalty. U.S. Treasury Secretary Janet Yellen and her Chinese counterpart will hold 2 days of talks in San Francisco this week, a step toward more normal ties. We get more from Bloomberg's Anne-Marie Hordern in Washington.
For her, it's all about the economy. Writing an opinion piece this morning in the Washington Post, listen to what she had to say. This week, I will speak to my counterpart about our serious concerns with Beijing's unfair economic practices, including its large-scale use of non-market tools, its barriers to market access, and its coercive actions against U.S. firms in China.
Again, Bloomberg's Anne-Marie Hordern. Yellen and Chinese Vice Premier He Lifeng will meet on November 9th through the 10th. That comes just ahead of a long-anticipated meeting between the leaders of the world's two largest economies. Congress has just 12 days left before the government runs out of money. House Speaker Mike Johnson will need to find consensus among a divided GOP caucus in order to avert a shutdown. It's unclear what his strategy will be for achieving that goal. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, John and Scarlett.
All right, Nancy, thanks very much. Scarlett, Bloomberg Business Week, the latest edition. Interesting story on the election. Apparently, the vast majority of voters don't want either Donald Trump or Joe Biden to be the candidates. It's a fascinating story, and the numbers are equally fascinating.
Well, it's Election Day Eve, right? Because tomorrow's Election Day, and then I believe President Biden is kicking off the official start to campaign season later today or tomorrow. And what the Business Week article makes clear is that the American populace is not very enthusiastic about what's to come next year.
Yeah, this is among the things in the story that are fascinating. The Washington Post ABC News poll found that only 37% approve of how Joe Biden has handled his presidency. Only 38% approve of how Donald Trump handled his. Half of the respondents say both men are just too old to serve another term. Nominees can often pivot to the center for the general election, but Jim Carville, who ran Bill Clinton's first presidential campaigns, says, I like this quote, "You can't pivot younger."
No. I mean, these guys are both in their late 70s, going to be in their early 80s. Maybe they're already in their early 80s. But either way, one thing that Americans of all political persuasions seem to agree on, a majority of Democrats, 68%, 57% of Republicans, and 78% of independents would rather have another choice, neither Biden nor Trump.
Oh, by the way, I love these little historical anecdotes here. Well, it's not an anecdote, it's a fact. The last time an incumbent president lost, ran against the same opponent 4 years later, and returned to the White House was 1892.
Oh, boy.
Grover Cleveland then faced off against Benjamin Harrison. And we know how that turned out.
Not
Remember
well.
that one? So,
it feels momentous, and what you're saying is that history has shown it won't be momentous.
It's also imperative to watch tomorrow the results of some of the referendums on the ballots concerning abortion as well.
So Election Day does matter.
Keep that in mind. As we close out, a quick look at the markets. S&P 500 up a whopping 1 point. The Dow Jones Industrial Average 11 points higher. The Nasdaq 100 right now is up 25 points. That's up 0.2%. Sound On with Joe Matthews starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Donald Trump on the witness stand in New York State's $250 million trial against him. A new poll shows voters in 5 battleground states favored Trump over Biden, and the Secretary of State's surprise visit to the West Bank and Iraq. I'm June Grosso in New York with Wendy Benjaminson in D.C., sitting in for Joe Matthew. And we start, as always, with a look at the markets with Charlie Pellet.
Right, thank you very much, June Grosso. We have got the Dow, the S&P, NASDAQ all advancing. S&P, though, has now been swinging between gains and losses. Just a moment ago, it was in the red. Right now, we have got the S&P holding on to a 1-point gain, up barely. This after the best week of 2023. Last week, you recall, the S&P 500 index rallied by 5.9%. The Dow just dipping negative as well. Dow Jones Industrial Average down 1 point. The S&P down 1 point. NASDAQ Composite Index up by 7. That is a gain of about 0.1%. 10-year yield 4.64% with a 2-year now yielding 4.90%. Spot gold down $9 the ounce to $19.83, a drop there of 0.5%. But crude rallying 1.8%. WTI West Texas Intermediate crude 81.94 a barrel. Bitcoin up now by 0.9%. Bitcoin 35,001. Wall Street's keeping an eye on Fed speakers this week, listening for any hints that the Fed is done raising rates. Tony Dwyer is chief market strategist at Canaccord Genuity.
We're just trying to figure out if they're done yet. I think they're 100 basis points overdone, and it's a foregone conclusion, which means ultimately, after we get this relief rally, which we're in the midst of, I think bad news has to be priced as bad news if you go into that recession environment.
And you can hear more of that conversation on the Surveillance Podcast. You can download it wherever you get your podcasts. PepsiCo's Chief Financial Officer, Hugh Johnston, will be leaving the company on November 30th. James Caulfield has been appointed Executive VP and CFO. Hugh Johnson has been named Chief Financial Officer of Disney, effective December 4th. Shares of the Walt Disney Company down 0.8%. PepsiCo up 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you, Charlie. Former President Donald Trump took the witness stand today in the case where his business empire is at stake. And he repeatedly sparred with the judge. At one point, Judge Arthur Engoron asked Trump's attorneys, "Can't you control your client?" And it seemed to only get worse from there. Wendy, he once again held a little mini press conference before he started his testimony. He talked about everything from the new poll out to, of course, this being an unfair prosecution. And I have to say, it sounded a lot like that in the courtroom.
It did. It absolutely sounded like that in the courtroom. He was giving campaign speeches. He was talking about how the judge is unfair to him and has always been unfair to him, and all the sort of airing of grievances that we know and love from Donald Trump. And the judge was really, it seemed to me, like on the edge of his patience, where he was actually threatening to dismiss Trump as a witness and then issue a negative inference. And I'm not a lawyer. We'll have to ask our guest about that. But that doesn't sound good. It sounds like it means the testimony went south.
Well, you know, the judge has been at the edge of his patience for almost the entire trial. Certainly he was last week with some of the gag orders. And we will bring in our guest, Jim Zirin. He's a former assistant United States attorney for the Southern District, host of Conversations with Jim Zirin on PBS. So, Jim, I want to just tell you one exchange here. Trump says, "I'm sure the judge will rule against me as he always does." And the judge responds, "You can attack me, but answer the question." And that was, you know, it went downhill from there. What's happening? I mean, does it matter? The judge, I think, knew what was going to happen here.
Well, of course it matters. Trump has not conducted himself the way a defendant should conduct himself or a witness should conduct himself in a case before the court. He doesn't have to respect the judge, but he has to respect what the judge represents, which is the rule of law. And that's what's wrong with Trump and Trumpism. It is undermining our justice system. And for him to take the stand and issue this kind of rant, which is not responsive to questions, first place, it hurts his case because the judge can draw inferences based on the nature of his statements and his refusal to answer questions. And secondly, it's improper. It shows no respect for our justice system or the rule of law. And that's a very serious problem.
Well, Jim, I've got two questions for you. One is here, Wendy, here in Washington. The one, please explain to us what a negative inference means when he threatened to throw Trump off the stand. But also, you quoted a judge in your op-ed in the Hill newspaper recently saying that no defendant would be able to get away with some of the things that Trump has said. And Trump complains that everyone's being extra hard on him because he's Trump. Do you think he's actually getting an easier time than Joe Blow from Queens would get if he were sitting in the witness chair today?
I think Joe Blow from Queens or you or I from whatever borough we come from. A witness has to have respect for the court and respect for the process. And the judge is the boss in that room, not Donald Trump, not anyone else. If he has some disagreement with the judge's rulings, the remedy is to take an appeal. But the remedy is not to go into these political rants, which he's been doing.
Yeah, but he gets away with it. And this is a judge trial. There's no jury there watching what's happening. A lot of this is for the reporters who are in the courtroom, and he gets away with it. I mean, let's face it, it's already an uphill battle for him in this trial. The judge has already found fraud here. So it's a question of damages. And, you know, how much his testimony really weighs in, I'm not sure.
Well, that's right. And he is going about this in a way that is highly improper. I think if it were anyone else, the judge would find him in contempt. And I think if it goes any further, the judge needn't clap him in irons and send him to Rikers Island. The judge will say, the next time you go into one of these rants, it's going to cost you $1 million. The second time, it's going to cost you $5 million. And you do it again, it's $10 million. You'll see how fast he shuts up.
Yeah, but I
don't think... If he has the money in any event.
Jim, do you really think the judge so far has fined him $5,000 and then $10,000? I mean, how high can he go up on the next one?
Well, that's chicken feed, but I'll bet Trump isn't paying for it anyway. I'll bet it's being paid out of some political PAC. Some donor who thought they were donating the money for political purposes, not for fines.
Well, and that actually, Jim, is an excellent point about the political nature of this. I mean, Trump doesn't care if it costs him $1 million of his legal defense fund, you know, as long as he can make the political points, because June's right, there's no jury in the room, but we're all reading stories about it. We're all glued to, you know, watching him with his little gaggles in the courthouse. And these are as much campaign stops as there would be, you know, standing in front of the butter cow at the Iowa State Fair. So how much can the justice system deal with the political sort of, you know, pontificating and the political circus that's going to go on not only in this trial, but in the 4 criminal trials to come?
Well, the justice system has to be malleable and has to adapt itself to this situation. George Washington would never have found himself in this situation, and we haven't had a president of the United States in all our history who has been charged with 91 felonies and 4 indictments in 4 different courts, 2 state, 2 federal. And the justice system will just have to learn to cope with it. And they will cope with it.
Don't you think that it'll be different when he's at a trial where there's a jury, that the judge will be more careful there to make sure that this doesn't happen, if he takes the stand even? I mean, this is a civil trial, so he had to take the stand when called by the Attorney General's office. But in a criminal case, he may not take the stand. And I think that the judges will be stricter when there's a jury there.
I think the judges will be stricter. And, in mafia cases, we've had unruly defendants who've made comments when they did not take the stand, and the judge actually gagged them in front of the jury. So there's precedent, not only for a gag order, but for gagging him so they can't interrupt the proceedings. He has to have respect for the proceeding.
And while that's true, I think they also need to, politically for themselves, for Letitia James, for any of the elected officials there, need to show a little bit of deference to a former president, don't they? Even if he's not popular in New York City?
He is he's a private citizen like any of us. The office he once held demands very high respect. He's not comported himself in a way that goes with the word respect. I mean, he's been irrational. He is engaged in these harangues against court personnel, against prosecutors, all to serve his own political ends. And the justice system will reach a point where it won't tolerate it.
Well, and I wanted to ask you about something just a little bit different. The collision between the political calendar and the trial calendar. Eileen Cannon down in Florida on the documents case, which actually seems to be the clearest of all the cases, she's now sounding amenable to maybe delaying the trial beyond May, maybe even giving in to Trump's request that it be after the election. What would be your take on how that would work, and how would it change the case legally if he were tried after the election and won?
Well, assuming he won the election, all these cases would disappear because he would either pardon himself, which means the end of all the federal cases, or he would direct his attorney general, since he's already said that if he gets in, he's going to have a politicized Justice Department, and he'll direct his attorney general to drop the cases, and they'll drop the cases. So that's what he's banking on. This New York civil case is one of the most threatening cases because it may strip him of his net worth and prevent him from conducting business in the state of New York.
Well, let me ask you this about the other cases. Is that why it's important that the Georgia case go forward? Because that would be a state conviction, and he couldn't pardon himself from that.
He could not pardon himself either from the Georgia case or from Alvin Bragg's Stormy Daniels case in New York.
I was avoiding that one on purpose because it's the weakest of the cases.
I don't know that it's the weakest. The false statements are very clear. The question is going to be enhanced into a felony, and I think it can. But that is the weakness. However, it's true, we can't pardon those offenses, but there's no way that a local prosecutor is going to bring to trial a sitting president or even a president-elect. It's just not going to happen.
There is some room, though, because the trial that was supposed to go forward a couple of weeks ago, they all pled out on that. So now there's some room in that calendar, perhaps, to bring the case earlier.
There is, but no trial date has been set. And I think if a trial date is set, you're going to have other defendants who will plead guilty. And the defendants who remain are going to be Trump, Giuliani, Mark Meadows, maybe one or two others. It'll be a very manageable trial, and it can certainly occur before the election. The real problem is that if he's convicted of all these indictments, he's still qualified to be the President of the United States. Why? Because the framers of our Constitution never dreamed that there would be a president or a candidate for president like Donald Trump. Lawless, contemptuous, disrespectful of the rule of law. He is a rogue candidate. He would be a rogue president. He said if he gets in, he's going to terminate the Constitution to stay in office. He said he's going to weaponize the Justice Department to get at his political enemies. We've never had that before. And our Constitution, which was framed in 1789 and the amendments in 1791, are just not geared to deal with it. The one hope of disqualifying him, unless the Republican Party wakes up and decides not to nominate him, the one hope of disqualifying him is the case in Colorado and Minnesota, where Voters have brought cases, as they have actually in 21 jurisdictions, to disqualify him.
But those cases are real uphill battles. There are so many different issues there that the plaintiffs have to win in order to win those cases. Do you really see those cases as stopping him from being on the ballot?
I see those cases as going to the Supreme Court, because if just one state holds that he's disqualified, the Supreme Court is going to have to make a decision as to whether Section 3 of the 14th Amendment to the Constitution disqualifies Donald Trump. And they don't have to find that he physically engaged in the insurrection by force. The history of the 14th Amendment shows that people have been disqualified based on speech. The simple statement that he plans to terminate the Constitution if he gets in office in order to stay in office violates Article 2 of the Constitution and violates Section 3 of the 14th Amendment. I don't think it's an uphill case, because there are a lot of issues that have been raised.
Well, the weight of authority says it's an uphill case. I mean, there hasn't been a case at that level, at the appellate level, at all. It's an open question, an open constitutional question that the Supreme Court, as you say, will have to decide.
That's true. It's an open constitutional question. It's an open constitutional question as to whether he has blanket immunity from crime for everything he did in office. He claims he does. The Supreme Court has never passed on that. But it would seem to me that the logic of the Constitution is that he does not have blanket immunity.
So, Jim, switching to another untested legal practice, or at least novel legal practice, we got a whole bucket full of them today, is John Eastman going on 60 Minutes last night. He is a defendant in the election case, and he went on 60 Minutes and laid out a whole defense for himself, opened himself up to all sorts of questions about how, the things that he did legally for Donald Trump to try to overturn the 2020 election were perfectly within his rights, and he went on in the sort of defense. If you were his defense attorney, would you have advised him to go on 60 Minutes while under indictment and awaiting trial?
Absolutely not, and it's hard to imagine a defense attorney who ever would have advised him to go on television. You don't want your client speaking until the time comes for him to take the stand at trial, if he does take the stand at trial. Eastman himself is a seasoned lawyer. Why he went on television and made these statements, it's incomprehensible. It's just like Trump, who goes on television and incriminates himself.
We'll find out more, I'm sure, about that. Thanks so much, Jim. That's Jim Zarin, former Assistant U.S. Attorney for the Southern District of New York. Coming up, we're going to be talking about voters in the 5 battleground states preferring Trump to Biden. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 121 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ now all in the red. Stocks have been struggling to gain traction after last week's blockbuster rally as Treasury yields climb. Traders are betting Fed officials will lean against the recent easing in financial conditions by saying they will keep their options open on policy. S&P right now down 9. That is a drop of 0.2%. The Dow Jones Industrial Average lower by 36, a decline today of 0.1%. The NASDAQ Composite Index, which had been leading the way higher, now leading the way lower. NASDAQ is down 0.3%. We've got the 10-year yielding 4.64%, with the 2-year 4.90%. Spot gold down $9.50 the ounce to $19.83, a decline there of 0.5%. A rally for crude oil, though, West Texas Intermediate crude up by 1.7%, $81.91 a barrel. Berkshire Hathaway's cash pile scaled a fresh record at $157.2 billion. Again, that is cash, bolstered both by elevated rates and a dearth of meaningful deals where billionaire Warren Buffett could put his money to work. Berkshire Hathaway, Class A shares down now by 1.8%. Again, recapping, stocks lower, S&P down now by 9, a drop of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound on Bloomberg Radio.
I'm June Grosso in New York with Wendy Benjaminson in D.C., sitting in for Joe Matthew. Voters in 5 battleground states favored Donald Trump over President Joe Biden. That's according to a New York Times Siena College poll. Voters in the battleground states said they trusted Trump over Biden on the economy, foreign policy, and immigration. Joining us now are Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. Jeannie, is it too soon for the Biden administration to worry about these, or is it time to worry?
It is time to worry. And I am a worrier by nature, June, so I say that with all due respect. This is very, very similar, actually, to what we found with the Bloomberg poll that came out a few weeks ago. So there is, really not much distance between these two polls, both looking at the battleground states. And Biden has a real challenge on his hands. To only be up within a margin of error +2 in Wisconsin doesn't bode well. That said, he has long had a struggle with critical constituencies, young people who I talk to all the time, African Americans, now the Arab population in the United States. So there are signs that he has trouble. That said, I take a little bit exception to how this has been portrayed as Trump versus Biden, only because Trump hasn't been in the news that much as it pertains to the election. His focus has been on his legal challenges and whining and complaining about his treatment in the court system. That's pretty much what he's been on air talking about. And I have to say, many people agree with him on those things. And so I think once people start to listen to your previous guests and others, the things he is saying openly about how he is going to, if he is ever reelected, use the federal government's power to, seek revenge and retribution, they may have a slightly different view, at least enough of them in these battleground states to make a difference. But that, by the way, is not a heck of a way for an incumbent president to run, but it may at this point be his best hope.
Well, I want to come in here and hello, Jeannie, and I wanted to ask you specifically about the Democratic numbers. Then we can go back to Trump if you like. But the numbers on Biden have been consistently across the New York Times, and thank you for mentioning it, the Bloomberg News Morning Consult poll of last week, which showed similar in these swing states. Like, we know Biden's going to win California. We know Trump's probably going to win Texas and places like that. In these swing states that will drive the election, Biden is not doing well, and as you said, he's not doing well among young voters who we counted on last time, among African-American voters who we counted on last time, among Latino voters, it's that they're, all over the map. So Democrats have a tendency to stick with the horse that they expected to win 2 years ago. And is there any point at which the Democrats, and I think I know the answer to this, are going to say, this guy's just not going to win. We're going to give the country back to Donald Trump. Maybe we should look at some of these others. Or is it just too darn late?
We have heard that. I mean, we heard David Axelrod come out over the weekend. We've heard Dean Phillips. We've heard others. I think the reality is, timing and otherwise, Joe Biden is the nominee unless he chooses to withdraw his name and allow the field to open up. And there's several reasons for that. The primary, the filing deadlines. The other reality, though, is that other Democrats, Andy Beshear, should he win tomorrow, Josh Shapiro, Gavin Newsom, Gretchen Whitmer, other potential people who might run, Kamala Harris. Nobody wants to be responsible for pushing Joe Biden aside and allowing Donald Trump a space and an entry to walk in. So many factors coupled, together means that unless Biden withdraws or, God forbid, something happens, illness or otherwise, he will be the nominee and Democrats will rally to him. The question is, I think, do they stay home in a general if he's the nominee because they're just, not excited or enthusiastic, or do they come out? And the reality also of American politics is unfortunate. I think this race will be decided by 100,000 people plus or minus in 5 or 6 states. Quite frankly, the rest of us don't matter that much. And that's no way to run a democratic election, but that's the way we do it here.
Rick, do you think all this angst by the Democrats over whether someone should step in for Biden, whether there should be, a different nominee, is that hurting Biden's numbers too?
Probably not. I mean, it doesn't get enough circulation, June, to, have rank and file voters being able to respond to these kinds of things.
It's just
to a pollster.
Affecting me then.
Yeah,
because I've heard so much about it already.
I know. Well, you got to get out of the Upper West Side. I mean, that's the first
Upper East Side, but that's okay. Same difference.
Upper East Side. I'm sorry. But anyway, I think it's what's really bothering them are the fact that, one, they got to see through the filter of his age, right? And we know a lot of Democrats are very concerned about an 80-year-old president, an 81-year-old presidential candidate, an 82-year-old president, right? I mean, like these are the things that are sort of first, second, and third on their list. And then they get to the economy, and Democrats aren't happy with the economy. I mean, these numbers in the Times Siena poll, reflective of the Bloomberg Morning Consult poll. I mean, almost half of black voters, normally a core constituency of the Democratic Party, are rating the president as wanting on economic issues. Over that with people under 30, as Jeannie was talking about, and so like these are sort of core Democratic constituencies that have a beef with the president, one, on his age, and then two, on his performance in office on the economy. Anything after that is just sort of, small ball in politics because sure, I mean, he's got the backing of the party on abortion, but less than 10% of the voters in these swing states think abortion's the number one issue. So he just doesn't have the right deck of cards. The guy needs a new deck of cards.
So, Rick, going back to Donald Trump for just a minute, one of the interesting points in that New York Times Siena College poll was that Trump's indictments and his trials aren't turning off Republicans and the independents who might support him, but a conviction would. A conviction would make at least 6% of those voters decide they better vote for Biden because Trump would be a convicted felon. And that might be enough to swing the election. But, one, I guess I'm sort of proud of voters who believe in innocent until proven guilty. But do you really think, that is finally, after all this time, the tipping point in Trump's enduring popularity?
Yeah, I wouldn't even say after all this time, Wendy, because the reality is the people who will flip on a conviction into the Democratic column are independent voters, mostly women, who were originally Biden voters. I mean, like the reason Biden's not winning in these states is because independent voters have basically gravitated to Donald Trump, and they're not permanent Trump voters. These aren't like the rural white males without a college education who make under $50,000 a year. They're not going anywhere for Donald Trump. conviction or otherwise. But what could happen is that if these trials go poorly, certainly independent women, especially in the exurbs and suburbs, could decide, you know what, I'm not happy with Biden. I'm not happy with inflation. I'm not happy with the current economy, which is why I'm sitting on the Republican ballot right now. But like, I cannot afford to give my vote to a person who's a convicted felon. So, I mean, these are though horrific situations for the president to be in, because he's now relying on the justice system to win a presidential race. I mean, June, I'm glad you're here on this show today, because only you could explain to us what the real risks are inherent in that strategy.
So, Jeannie, I want to ask one question about how the issue of abortion is going to play into the presidential race. Do you think it will affect the presidential race?
We're going to get a preview of that tomorrow night in places like Virginia, Ohio, some other states. 6 states have gone pro-abortion rights since the Dobbs decision. And I think tomorrow is going to be a test. Do voters, particularly Democrats, put aside their lack of enthusiasm for Biden, their frustration with the economy, and go out and say, abortion is important enough that we will get out and vote Democratic because they've promised to protect it. Another thing to watch, I would say, is Governor Youngkin's message in Virginia. He's got a really different and interesting message on abortion than many Republicans who are defensive. He's gone a little bit on the offense. So if that plays, it may help Republicans. But to answer your question, yes, I think it is critical to watch abortion. In the poll, it was the one area where Joe Biden was doing better than Donald Trump when it came to an issue.
All right, we'll have more with Rick and Jeannie next, but first, let's get a check on world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington.
Thanks, June. Former President Trump is back in a New York City courtroom today, this time taking the stand in the civil fraud trial against his company, the Trump Organization. Trump is accused of altering the value of his properties and assets in an attempt to receive favorable loan terms and lower tax payments. Outside the courtroom, Trump talked with reporters and maintained his innocence.
It's very unfair. It's very unfair. But in the meantime, the people of the country understand it, they see it, and they don't like it. They don't like it.
New York Attorney General Letitia James.
Mr. Trump has repeatedly and consistently misrepresented and inflated the value of his assets.
The judge has already ruled there was fraud committed in the Trump Organization, but still has to rule on the monetary payment that Trump may face. President Biden, perhaps the nation's biggest Amtrak fan, is touting new federal investments for trains on the heavily trafficked Northeast corridor. He's promising more than $16 billion in new funding that will go toward 25 passenger rail projects. Israeli troops now surround Gaza City and have effectively cut off the northern part of the Gaza Strip from the south. That is according to the Israeli military, which says it has also seized a Hamas base. President Biden has spoken with Israeli Prime Minister Benjamin Netanyahu today to discuss the latest developments. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long at Bloomberg. Red on the screen with the Dow, the S&P, and NASDAQ all declining. Right now we're looking at a 10-point drop for the Dow Jones Industrial Average at 34,051. S&P 500 index down 3 now, lower a little change, but in the red at 43.54. We've got the NASDAQ Composite Index down 13 points. That is a drop now of just about 0.1%. S&P, to put it all in context, lower by 0.1%. The Dow, little change, down less than 0.1%. So a losing day for the Dow, the S&P, and NASDAQ after last week's big advance. The S&P last week, you recall, was up by 5.9%. Well, one of the big issues for investors is assessing the health of the consumer. Ashley Allen is corporate credit research analyst at Franklin Templeton.
Consumers are still spending, especially on some things that they'll want to indulge in, whether it's coffee, sweet treats in the grocery store. So the data is backward looking, so we have to keep that in mind. But up until this point, again, resilient has been the word that economists have said over and over. They're still showing up to spend on the things that make them feel good.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Tyson Foods, the largest American meat producer, is recalling almost 30,000 pounds of chicken nugget products aimed at children because of possible contamination with metal pieces. Again, recapping, stocks are lower. The S&P down 3 now. That is a drop of just about 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
June Grasso in New York with Wendy Benjaminson in D.C., sitting in for Joe Matthew today with our Bloomberg Politics contributors, Jeannie Shanzano and Rick Davis. It was a frantic weekend of travel for Secretary of State Antony Blinken that took him from Israel to Jordan, the occupied West Bank, Cyprus, and Iraq, to build support for the Biden administration's proposal for humanitarian pause to Israel's military campaign in Gaza, and to keep the conflict from igniting a wider war. Blinken spoke to reporters in Turkey this morning following his trip to the Middle East.
We've also had very important conversations throughout this trip with countries in the region on the role that everyone can play in making sure that the conflict doesn't expand, doesn't spread to other countries. And of course, we remain very focused on the hostages held by Hamas, including Americans, in making sure we're doing everything possible to bring them home.
So, Jeannie, Blinken said before leaving for Turkey, all of this is a work in progress. But how much progress is he making? It doesn't even seem that they can get some consensus on humanitarian pauses in the fighting.
Yeah, I mean, they are still working on that. I do think it was a very important weekend. There was, Blinken engaged in round-the-clock shuttle diplomacy. And I think very importantly, in the interests of the United States, he had a very strong message to share about Iran and to share a warning, really, Iran not to think about trying to spread or their proxies this war and not to get any more involved. And, to really send that message is critically important to the United States, not to mention the commitment to getting humanitarian aid in there and also getting the hostages out. So, he is doing the work that needs to be done. It's not going to be fast. It's not going to be easy. He is meeting some resistance, obviously, but I think it's critically important that he sends this message and shows that the United States is committed to having a role in this and a voice in ensuring that this doesn't expand any further.
Well, it certainly isn't going to be easy or fast, Rick. And I wanted to turn to you to say, this trip, was a great effort on his part, but he got stiffed by Turkey's President Erdogan. He got a public drubbing from the Jordanian leadership and king. He got sort of a ceasefire or nothing response from Mahmoud Abbas of the Palestinian Authority. So, is any progress being made here at all?
Yeah, and Wendy, this is just the current trip, right? The first trip he took over there, they literally canceled a summit around his visit in Jordan. So Yeah,
Right.
he gets no respect, but one, it's good to let him get off their steam. So, if he has to be the punching bag, that's kind of the job of the Secretary of State. Two, containment really is his top goal. So while he's getting beat up, he's not seeing an increase in sort of, military action on the part of some of these Arab regimes that have a bone to pick with Israel. So far, so good, knock on wood, because that is the number one objective. Don't let Iran and its proxies in the region expand the fight beyond Gaza. And so far, that seems to be working. At the end, I wish the administration would spend at least the same amount of time with other senior officials in the administration working Capitol Hill to get their funding package done, because that has seemed to have lost some of its steam over the course of voting for speakers and working on budgets. And I think sending a message to Iran that we are prepared to fund Israel's prosecution of this, regardless of any of the current tactics, would be very important to whatever Secretary Blinken's trying to do on his own.
Jeannie, we saw tens of thousands of demonstrators marching in the streets of world capitals over the weekend to protest Israel and condemn U.S. support for Israel. And a lot of those are young people. I mean, we saw what happened with the poll with Biden's strength with young people. I mean, how much do you think the tide has turned here and that the U.S. population is not in favor of so much aid to Israel at this point, or is cautious about it?
Yeah, I do think we are seeing that. We have seen a similar trajectory in a slower momentum as it pertains to aid for Ukraine. But I think in particular, in the case of involving Gaza, there is a real concern about the humanitarian factor, which is why Anthony Blinken, why the president have repeatedly said over and over that they are struggling very, very mightily to ensure that they get humanitarian support over there. And so these protests, they are hearing the message, but of course you have a lot of people and young, middle-aged, old out there on the streets saying we've got to be careful. That's why I think it's critically important what Secretary of State Blinken was saying over the weekend, and the administration make the case that if the United States, or when, not if, we do fund and help fund Israel with this $14 billion plus or minus dollars, that we get a commitment not to build any more settlements, and we get a support for a two-state solution. That is going to be critical going forward, not just politically at home, but more importantly, for what is going to follow after Israel and Gaza engage in this war.
That's an interesting point, Jean. I want to go to Rick for this one. I mean, part of Blinken's trip was also to get the Israeli leadership, to get Netanyahu in particular, to agree to some sort of pause. I know ceasefire is not the word they want to use, but a pause to let some of the Gazans out, to let some of the foreign and dual nationals out. Israel has a tendency, I think, to do what they're going to do, regardless of what the U.S. or its other allies ask them. And if the aid is coming unconditionally, not as opposed to IRS spending or anything like that, but we're going to give you this money so you can execute the war how you want. Why would Netanyahu listen to Blinken if it's unconditional?
Yeah, first of all, I mean, the U.S. and Israel have a long-standing cooperative relationship. We have security agreements in place. I don't think it's a matter of, whether or not they listen to one another, right? I think in this case, Bibi Netanyahu has a constituency that is tired of the relationship they have in Gaza and are doing something about it right now. And they're going to follow their game plan. And they don't really care about public opinion in the United States or public opinion in Europe. And so I think in their minds, the allies are important. They're critical to long-term funding and support with military assistance, but they're not going to satisfy the demands of Israeli voters, and that's what Bibi's got his eye on.
Thank you both for being here every day, as always. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano. You're listening to Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. WeWork shares remain halted. No comment, no statement from the company, but there's no trading either. WeWork shares halted amid reports that the office-sharing company, once valued as high as $47 billion, will seek bankruptcy protection. The specter of bankruptcy has been hovering over WeWork for some time. Back in August, you recall, the company sounded the alarm over its ability to remain in business, but cracks had begun to emerge several years ago. Again, no trading in shares of WeWork. Ryanair Holdings is going to be paying out a dividend of 400 million euros, $430 million. It also plans to hand over about a quarter of annual profit to shareholders as Europe's biggest discount airline benefits from growing traffic. CEO Michael O'Leary was at Bloomberg this morning, and he spoke about the airline's strong demand with Bloomberg Radio.
The ultimate underlying trend across Europe, we've locked up everybody for 2 years of COVID. They all want to go back traveling. Families want to go on holidays. We've just completed the October midterm break. We were still full. And I think what people want is to travel more, but there's only 90% of the pre-COVID capacity. So in Europe, you've constrained capacity, enormous demand, and that is resulting in very strong pricing, not just for Ryanair, but for all of the airlines.
And again, that is Ryanair CEO Michael O'Leary. ADRs of Ryanair are rallying today. They're up now by 3.4%. And those are some of the top company stories we're following for you at this hour. And this is Bloomberg.
You're listening to Bloomberg Sound on Bloomberg Radio.
I'm June Grosso in New York with Wendy Benjaminson in D.C., sitting in for Joe Matthew. We're going to be joined by Kaylee Lyons in just a few minutes. But first, let's get up to date with world and national news. Nancy Lyons has that in the Bloomberg 99.1 newsroom in Washington. Back to you, Nancy.
June. Thanks, June. Former President Trump has been on the witness stand today in one of the half-dozen legal cases against him ahead of next year's presidential election. Today, the judge threatened to excuse Trump as a witness for filibustering on the stand instead of answering questions, at one point telling the former president this was not a political rally. Former Assistant U.S. Attorney for the Southern District of New York, Jim Zirin, spoke with Bloomberg about Trump's outbursts on the stand.
A witness has to have respect for the court and respect for the process. And the judge is the boss in that room, not Donald Trump, not anyone else. If he has some disagreement with the judge's rulings, the remedy is to take an appeal. But the remedy is not to go into these political rants.
Former U.S. Attorney Jim Zirin speaking earlier with Bloomberg Sound On. This week, the Supreme Court is hearing arguments in a challenge to a 1994 law prohibiting people facing domestic violence restraining orders from owning guns. A Texas man who is the subject of such an order after assaulting his girlfriend has challenged the law as a Second Amendment violation. Tomorrow's case is the first one involving guns to reach the justices since last year's landmark decision expanding gun rights. President Biden is announcing new federal investments for trains running along the busy Northeast Corridor. Biden spoke at a maintenance site for Amtrak trains in Bear, Delaware. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, June and Wendy.
Thanks so much, Nancy. So, Wendy, I think what I learned about Donald Trump on the stand today is that nobody knows and nobody can tell what effect it's going to have on the judge. He's just a unique individual, and he gets away with a lot that way.
Well, he absolutely does. And I think anyone who's been watching Donald Trump since he came down the golden escalator in 2015 knows that there is no controlling him. I think his lawyers have probably adopted this aggressive strategy with the judge where they say, wait, he has a right to say this. He's a presidential candidate. One, because Trump is probably yelling at them that is what they should say. And also because it's better than trying to spend all of this time just getting Donald Trump to, act like a normal, humble defendant in a trial, worried about cost and freedom and things like that. So I think this is one of the many uncharted paths we are on right now.
Yeah, I think it's very interesting, if we could actually talk to the lawyers and have them talk back to us truthfully, because they started to adopt his attitude toward the judge as far as that gag order. After he was fined the $15,000 last week, they started engaging in the same kind of stuff that Donald Trump was doing, talking about the clerk and how it was not right for the clerk to be handing notes to the judge. I mean, this kind of ridiculous argument before the judge, who then said, hey, this is my courtroom and I can do what I want, basically. But I mean, it's interesting that it's the lawyers adopting what the client is saying instead of the opposite way, which is the way it's supposed to go, the client listening to the lawyers. That just doesn't happen with Donald Trump.
No, it doesn't. And it didn't happen in the White House, and it doesn't happen on the campaign trail. I think we know that is just sort of, when he's around, he's the boss. And, the truth is that there are a lot of Americans who seem to appreciate that.
And coming up on Wednesday, I think it is, we're going to see what Ivanka Trump has to say and whether she falls in line with the way her brothers testified, all for Donald Trump, or whether she takes a divergent path. So we shall see.
It'll
that
be a
coming
fun
up
week.
on Wednesday. It definitely is going to be a newsy week. So coming up next, you're going to have the second hour of Sound On with Wendy and Kelly Lyons. And that starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top name.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew and Kaylee Lyons on Bloomberg Radio.
Welcome to the second hour of the fastest show in politics. I'm Kaylee Lyons with Wendy Benjaminson today. We're in the driver's seat while Joe Matthew takes a day off. Clearly, I might need one as well. But we have a lot to discuss here, and so we'll get right down to it. We're just 11 days out from November 17th, which is the deadline to continue to fund the government, and it's unclear how Congress is planning to avert a shutdown. We're going to talk about it with Mick Mulvaney. He is the co-founder of the House Freedom Caucus, also former acting chief of staff to former President Donald Trump. And we have to talk about him, too, as a New York Times Siena poll shows him beating Biden in several key swing states. We'll talk about that with Joshua Green of Bloomberg Business Week. Plus, we have to check in on what's happening in the Middle East after Secretary of State Antony Blinken's trip there with an ongoing conflict between Israel and Hamas. Ian Marlowe will be joining us for the latest on that. First, though, let's get the latest on the markets. Bloomberg's Charlie Pellet has that for you. Hey, Charlie.
Thank you very much, Kaylee Lyons. We have got the Dow, the S&P, NASDAQ all in the red right now. Stocks have been struggling to gain traction after last week's blockbuster rally. Treasury yields are climbing. Traders betting Fed officials will lean against the recent easing in financial conditions by saying they will keep their options open on policy. So here's where we stand. S&P at 43.53 right now, down 4 points. That is a drop of 0.1%. Dow Jones Industrial Average down 14, a decline right now of about 0.1%. The NASDAQ Composite Index down 15, a drop right now of 0.1%. We've got the 10-year yielding 4.64% with the 2-year right now 4.90%. Spot gold down $11 the ounce to $19.81. That is a drop of 0.5%, while West Texas Intermediate crude up 1% right now, 81.35 a barrel. So last week the S&P 500 index rallied 5.9%. Stuart Kaiser is head of U.S. equity trading strategy at Citigroup Global Markets, and he sees further gains ahead for stocks.
We do think the market's going to move higher into year end. That's been our view for the last couple of weeks. The bear case has been a little bit of a whack-a-mole. People tell us data's too strong, you can't be bullish. Data's too weak, you can't be bullish.
The fact is the underlying U.S. economic data remains strong. As a simple rule of thumb, I think as long as the U.S. labor market and services spending holds in, you can run long equity risk. If that comes under pressure, then you want to get out quick, and you want to be very cautious about when to re-enter.
And you can hear more of that conversation with Stuart Kaiser on the Surveillance podcast. You can download it wherever you get your podcasts. BioNTech shares gained after the German vaccine makers swung back to a profit, helped by sharing costs with drug-making partners, including Pfizer. BioNTech up right now by 5%. Pfizer shares, they're down by 0.5%. Again, recapping, stocks are trading lower after earlier gains. The S&P now down 6, a drop there of 0.1%. 10-year yield 4.65%. That 2-year at 4.91%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, with an update on the Monday trade. Thank you very much. Of course, because it is Monday, it is a new week. Wendy Benjaminson. And with every new week brings us closer and closer to a deadline in Congress, November 17th. Yes. It's the 6th now, so that's 11 days by my count. And 11 days seems like it might be enough time to get things done, but I'm not really clear on what exactly it is they're going to try to get done by then to keep the government funded. So maybe it's not that much time.
Well, I think you have a lot more faith than perhaps I do right now in the state of Congress's ability to get anything done. How long did it take them just to get a speaker in the House?
That's true.
So they have 11 days. They are not anywhere close to agreeing on whether the Israel aid should be tied to spending cuts, whether the Ukraine aid should be tied to Israel, whether any of it should be tied to the U.S.-Mexico border security funding. Right. I mean, there's very little agreement here, except some general notion that, yeah, we ought to give Israel some money right now.
Right. And it's unclear exactly how they do that the Senate can agree to in the first place, because the Senate wants to tie Israel with other things that it doesn't seem like the new Speaker, Mike Johnson, is super interested in tying it to. Right. So it becomes a question not just of sorting things out internally in the House of Representatives, which, as the past Speaker proved time and again, is very hard to do. It's then reconciling it with the other chamber and making it something that President Biden will sign when it comes across his desk.
That's right. And there will have to be some real jujitsu going on for this to happen by November 17th. But then, of course, they all want to get out of town for Thanksgiving, as all of us do. So how long this is going to last or what's going to happen, I don't know. Mike Johnson does seem to make some noises suggesting he is interested in a continuing resolution. Yeah. So maybe there will be one that they can work out. We'll have to see.
The question is, will it be clean? Will it come with spending cuts that might be not super appetizing to Democrats in the other chamber? Or could we see a laddered continuing resolution, even though none of us really know what that means?
The mystery.
Has anyone sorted out the definition?
Not a single person. Maybe Mick Mulvaney can do it.
Okay, well, let's ask him. Mick Mulvaney is with us now. We always appreciate him joining us on Mondays. He's a man of many titles, as we always tell you. Former acting White House Chief of Staff under the Trump administration, former OMB director, and of course co-founder of the House Freedom Caucus as a former congressman from South Carolina. Mick, good to see you. We always appreciate your time. How do you think this shakes out? What do you think happens to keep the government funded? And can you please tell me what a laddered CR is?
I think so. By the way, hello, Wendy. Welcome,
okay.
Welcome to the show. You guys have clearly run Joe off, which I approve of, so that's fine. This is what I'm hearing, is that there is some support for a semi-clean continuing resolution. This is coming from some of the Republican conservatives who would never have voted for that under Kevin McCarthy, but think they might be able to do it under Mike Johnson. The words I keep hearing are, "Well, we trust Mike more," et cetera, et cetera. He's new on the job, et cetera, so we'll cut him some slack. So there are some discussions about a CR that would take you through either the end of the year or early into next. That laddered concept is interesting. And as best I can tell, or as best anybody seems to be able to tell, is it's instead of doing a CR for the whole of government, you would do a CR and try and slice it up into pieces that align with the 12 spending bills. So there would be a CR for defense, a CR for HHS, a CR for State Department operations, a CR for the VA, that type of thing. And that way, if they did pass one or two or more of the appropriations bills in that period of time, that would sort of then drop into the spot created by that piece of the laddered CR. Does that make any sense at all, now that I've tried to say it out loud for the first time?
I think so, but I'm squinting.
Well, yeah, I am too, and I really feel bad for the folks over at the Office of Management and Budget who would have to administer a laddered CR.
Don't feel bad for them. They're wonderful people.
I'm sure they are. But let's talk about, let's say that Mike Johnson has the magic potion and he gets a CR that Biden signs it and everything's hunky-dory. It goes till January 15th. The day of the Iowa caucuses, or it goes until April after Super Tuesday when pretty much the nominees are set. How that deep into an election year can they solve a spending issue?
Wendy, I don't think the dates of the various political events factor in as much as that trigger date for the Massey Amendment that was made part of the debt ceiling deal. And as I sit here and talk to you, I can't remember what the date was, but it's sometime in the first quarter of next year that there's an automatic across-the-board spending cut. I think it's 1%. If there's a CR on that particular date. That changes the analysis because there's going to be a lot of Republican conservatives who would love to see that triggered because they get the automatic 1% spending cut. And there's a lot of Republican sort of centrists, especially the appropriators, who don't want to see that. So that's that next sort of inflection point that might drive a wedge between various wings of the Republican Party. I don't think you see that with a CR that goes to the end of the calendar year. I don't think it goes if it goes to January 15th. But you start talking in March, April next year, then you talk about that automatic cut, which is going to be a real spot of friction between the two folks, much more so than whether or not Donald Trump is the nominee, because he's going to be the nominee, and everybody's acting in Washington like he's going to be the nominee already.
Well, to that point, Mick, as we're preparing for a Republican debate on Wednesday, another primary debate, the third, in which the former president and frontrunner will not be in attendance, but it comes at a time where it feels like Nikki Haley actually has momentum in a quasi-sustainable way. She, of course, heralds from your South Carolina. Do you think she stands any real chance of challenging your former boss?
Right now she's the most likely, but keep in mind, she's done great the last month or 6 weeks. She's done really well. She's doubled her polling across the board. She's in the low double digits. I think she went from 7 to 14 in Iowa. But please allow that to sink in. She doubled from 7 to 14. Donald Trump is still in the low 50s. And more importantly, I think if you watch the dynamics, she's taken the support away from Ron DeSantis, not away from Donald Trump. This is not a pay three places kind of horse race. It's not win, place, or show. If you're not first, you're last. So Nikki does have momentum. She does seem to be the ascendant primary challenger, but she's still 45 to 50 points behind Donald Trump. That's a huge number. And in any other ordinary year, we wouldn't even be talking about it just because Donald Trump is so far out in front. But we need something to talk about because he's not engaging in the race, at least in a head-on-head one yet.
Well, let's talk about that. The polls, the debate is Wednesday night. Nikki Haley may have another chance to talk about foreign policy. And it seems that she may be able to be ascendant there. What about if Donald Trump is actually convicted in any of these trials? The New York Times Siena College poll said that 6% of voters would switch off Donald Trump if he were actually ever a convicted felon. Is that the window that a Nikki Haley or a Ron DeSantis could slip into?
Maybe. As soon as you say yes, you become yet another person who has predicted Donald Trump's inevitable fall from grace, and it's never happened. So I think that the track record would suggest that no, it doesn't hurt him if he's actually convicted, at least in a Republican primary. I think if your point, Wendy, is that, well, it looks like it might cost him in a general, and that might cost him the ability to win, because 6 percentage points in a Republican primary is nothing. He still wins easily. 6 percentage points in a national election can be a big difference depending upon where those votes fall state by state. But let's make the case, okay, if he's convicted, now Nikki Haley and DeSantis can say, well, look, he's convicted. He'll never win a general. This is the time you need to abandon him and come over and vote for me, to DeSantis or Nikki Haley or Tim Scott or whatever. Maybe. I just think Trump has just done such a masterful job of making himself out to be a victim. You talked a little bit about that on your intro, that these criminal investigations and this civil investigation in New York that's going on today is actually helping him politically. He has successfully made himself out to be the victim of a weaponized government. That's a message that's resonating with people well beyond whatever I expected. He's doing better now with the minority communities, the African-American community, the Hispanic community than he was doing 6 months ago. And I think it's that victimization thing that he's been able to sell. So again, the man has more than 9 lives, and I'm not going to be quick to predict his end at this point.
Well, and Mick, I'm not sure you're exactly wrong about what you first said about it helping him financially, because he has been able to fundraise off of that, and arguably a lot of that's going right to those legal bills, as we've seen him in court now, and he's going to spend a lot more time in court, or at least his lawyers will, over the course of the next year. As we talk, though, about the former president and all the investigations and charges that he is facing, to bring this back to Congress, there's, of course, a separate investigation happening into President Biden in the House, an impeachment inquiry. Do you think that that could be damaging for Republicans in 2024 if they go ahead with it? Mike Johnson has said he doesn't want to predetermine any outcome, but it does seem like generally he's supportive. And we all saw last week when there was a bunch of Republican members on Sean Hannity's show, everybody put their hand up when they said, yeah, we think we're going to impeach Biden.
Yeah, I can see it both ways. Let me make the case real quickly for both sides of that equation. It's bad for Republicans. It's bad for Republicans because people are tired of this. They now perceive impeachments to be political show trials. Donald Trump had 2, could have had 7. If he gets elected again, he's going to have 50, right? It's become a running joke with some voters. And if the Republicans run the risk of alienating those folks who would typically be swing voters, that could hurt them. The flip side is, could it hurt Biden? I think it could hurt Biden in this way. If there's evidence, these 2 checks don't help Biden, and what it does, combined with his entire experience with his son Hunter, is part of his sales pitch. Part of what he was offering in 2020 was vote for normalcy, bring back normal government, bring back a president who looks like a president, not like a clown, bring back somebody who's got some stability in his life. Vote for me. And if his son is running around and this money comes back to him in some fashion, it sounds like he might have already made some mistakes about, where's the money? Show me the money. Or I had a Chinese firewall up between me and my son. Those seem to be breaking down. Some swing voters might look at this and go, everybody's corrupt. There are no normal people in politics anymore. And that sense of dejection, I think, hurts Joe Biden more than it does Donald Trump.
So let's go back to this debate on Wednesday night for just a minute, Meg. Why are we listening? If everyone is so certain as you are in the Republican Party that Donald Trump is the nominee, why are we doing this? And why has the RNC agreed to 4 more debates with the not Trump candidates?
Yeah, there are a couple different answers because there's a couple different constituencies in the answer. Keep in mind that the crowd did get dramatically smaller. The audience got smaller from the first one to the second one. So more and more American people are asking the same question. Still, this is a Republican primary, and the RNC is sort of doing what it knows how to do, which is it's a primary season. We have to have debates. If we don't have debates, it looks like we're favoring Trump, and we can't do that. Even though he's the former president, he's not an incumbent. So we're trying to play it straight down the middle with all of these folks. And there's legitimate candidates. I mean, Ron DeSantis is a legitimate presidential candidate. Everybody up there, Larry Elder wasn't, but most of everybody who's going to be on the stage on Wednesday night is a legitimate presidential contender, and the RNC has got to treat it that way. There's also a good bit of money to be made here. I think the parties make a good bit of dough off of the debates from the sponsorships and so forth. So there is a money-making operation. But at the end of the day, it's what they do. It's what they're set up to do. Is like, look, there's 7 people or whatever it is now running for president. Here they are. Go take a look at them. We'll put them in front of you on national television. Let you decide. It's what they're supposed to do. It's Trump that's actually, thrown this into chaos, which is nothing new, by not showing up.
Trump throwing something into chaos?
Yeah, I don't blame him for not showing up. I think it's the right decision in the primary. I think it may come back to haunt him when Joe Biden, assuming Biden's the Democrat nominee, has the ability then, with good reason, to say, oh, Donald, you didn't debate in the primary. I'm not debating you in the general. And Trump would be desperate for a debate head-to-head against Biden. Biden would be desperate for an excuse not to do one, and I think Trump may have given him that excuse. So, look, we'll go through the motion. We'll do it. It might be good entertainment. Certainly, it's helped Nikki Haley in the past. It might help her again. It might help somebody else. You never know.
All right. Well, we'll all look forward to Wednesday, but we always look forward to Monday when Mick Mulvaney joins us. Thank you very much. As always, of course, former OMB director, former congressman from South Carolina, Freedom Caucus co-founder, and former acting chief of staff to former President Donald Trump. A lot of formers, but we love actively talking with Mick. We're going to have much more coming up on Sound On. Thanks for joining us. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long at Bloomberg. We have got the Dow, the S&P, NASDAQ, and the NASDAQ 100 index all in the red. Stocks are struggling after last week's blockbuster rally as bond yields rose. Traders are betting that the Fed will be leaning against the recent easing in financial conditions by saying it will keep its options open on policy. Wall Street's also wading through the Senior Loan Officer Opinion Survey on bank lending, known as SLOOS. which showed tighter standards and weaker demand. So here's where we stand right now. 7-point drop on the S&P 500 index, very close to session lows. Right now, the S&P is at 4351, down by about 0.2%. Dow Jones Industrial Average down 57. That is a drop of 0.2%, while the NASDAQ Composite Index is lower by 0.1%. Right now, we have got NASDAQ down by just about 15 points, again down 0.1%. The Russell 2000 Index of small cap shares leading the way lower, down now by 1.5%. 10-year yield 4.65%, with a 2-year that's yielding 4.92%. Spot gold down $13 the ounce, a drop there of 0.7%, $19.79. And West Texas Intermediate crude up by 51 cents right now. We've got WTI up by about 0.6%. Number of C-suite departures at several companies today, but among them PepsiCo. CFO Hugh Johnston will be leaving the company on November 30th. James Caulfield has been appointed CFO at PepsiCo. Hugh Johnston, though, named Chief Financial Officer of the Walt Disney Company effective December 4th. Disney shares down 1.6%, and shares of PepsiCo down now by about less than 0.1%. Again, recapping, stocks lower, S&P